Damn. All right, all right. Ladies and gentlemen, it's Rodrigo here with Matt Maley, Chief Market Strategist at Miller Tabak, 40 years in Wall Street. He's been at Merrill Lynch, Salomon Brothers since the early 80s. A lot of experience, okay? We will have a very, very packed, intense session here with you guys, okay? So I need you to make sure you're paying attention, okay? Number one, because we will be covering a lot. Trade ideas, setups, options educations, market discussions, macro analysis, industry analysis, Fed discussions, a whole lot of things. And we will be talking about crypto, what's going on there. So a lot of topics to cover today. And I believe that we do have a couple shout outs here, by the way, Ward, Visha, Chadney. We do have a couple of folks here, some members from the chat also. A couple shout outs to Alan, Alexis, Kevin's in the house. What's up? SMTZ, V, RR, Alan, Travel. Okay, so we have a packed session here, folks. I do think that we have Matt Maley in the house. So let's go ahead and give him a proper introduction like we always do here.
Damn, son, where'd you find this?
All right, all right. So let's go ahead and bring on Matt. I do believe he's in the back somewhere. Let's see. All right. Okay, so we're just waiting here on Matt. He should be good to go, though.
Are we all set? Sorry there, Rodrigo. I was hitting the wrong buttons there.
No worries, man.
Okay.
How you feeling today?
Good. And it was an interesting day today. We made money on both sides, both on the bearish side in the morning. I wouldn't be a lot because the market only dipped a little bit, but we took the profits at the right time and held on to our calls and rode them to the end of the day. So it was or to the very close to the end of the day. So we made a little money on some trades we put on late yesterday on some index options. And made more money on both the bearish and bullish side. It was kind of funny because we set one up really to kind of be a hedge against the other and closed out the bearish bet early, held on to the longest bet. We made money both sides. So it was a good day.
Right. And just for those that are not familiar here, so Matt Maley has a live trading room. He's there Monday to Friday, and he's trading short-term expiration options, calls and puts, nothing crazy, no spreads, verticals, none of that stuff. So this is great for beginners. Matt, so before we do get started here, can you give us a brief introduction of your extensive 40-year career in Wall Street?
Sure. Yeah. I started almost 40 years ago next week on Wall Street in the 1980s. And the thing is, I've been a strategist here at Miller Tabak for about 10, or gosh, I'm sorry, over 15 years now. But unlike most strategists who were former analysts and economists or whatever, I was a trader for 25 years and did it on two of the biggest and most important trading desks on Wall Street. 15 years at Salomon Brothers, which was easily the most important trading desk on Wall Street in both bonds and stocks in the 70s, 80s, and 90s. I was there for 15 years in the 80s and 90s. And then 10 years at Merrill Lynch. Or not quite 10 years, almost 10 years at Merrill Lynch, by far the biggest trading desk on Wall Street and one of the most important. And when I did that, I was covering the trading desks of many of the biggest institutions in the business, and the biggest mutual fund, the biggest hedge fund, very big insurance companies, banks, et cetera. And when you do that, you really learn about what not what should be happening, not theoretical things about where the market should be 5 years from now, or where a stock or group should be even a year from now. I thought about where it's going to be a couple of days from now, a couple of weeks from now. And don't get me wrong, always looking at the longer term or intermediate term, 3-6 months out, and then longer term, a couple of years. But we really learned about how to make money as an active trader. And that's, again, we all like to have a bucket of money where we put it in there and just let it, not just let it sit. You might, you move those investments around, but very gradually you had those, with a 3-5 year horizon. But you want that other bucket for those who have the time and inclination where you want to be a more active trader. And you can really, again, if you're trading on fundamentals only, if you're trading on only those theoretical issues, you're going to get your head handed to you. Because as I've said many, many times, it's the market is not always right. I don't care what they say on TV. The market is not always right. It's only always right eventually. That's how we make money. That's even how Warren Buffett makes money. He makes money when the market's wrong and stocks are oversold on a long-term basis. But there's many more opportunities on a short-term basis, and we have been able to maximize our returns playing playing that active bucket in a great way in a year this year where most people have obviously have lost money.
Right. No, definitely. This has been a year that, you have to kind of learn new things. And look, the good thing is that all the people that have to do in the room is basically just follow your trades because you're posting them, clear exits, clear entries. It's not like, yo, I think the market will go up one day. This is very specific, the specific contract you have to buy and everything. So it's all laid out. It's basically the Matt Maley strategy that Matt has developed through his 40 years of experience in Wall Street. And let's not forget, your gut instinct is a lot more educated than somebody that is just starting out and has a gut instinct. There's a difference in what that means, right?
Yeah, and again, I've been doing this a long time, but I've kept up with things, which is obviously very important. Some guys kind of keep trying to trade things the way they were, 5 years ago, much less 40 years ago, and you're trying to stay current. The old saying used to be stay current and competent, and that's what I've tried to do, and I think I've been successful at doing it. But one of the things is as you said, Rodrigo, we really try to give what we definitely not just try to do, we give specific trades. It's not just, and sometimes things that I say in the chat room may spark people to make some bets that I don't necessarily give specifics on. But when I do a trade specific, we say, this is, hey, I like Apple here. I think it's going higher. No, I say, I like Apple here. I think it's going higher. So you should buy the Apple December 12th, $150 calls, whatever. I'm making those up right here. Just those numbers. But and then when it's time to get out, okay, I'm going to sell, or maybe I sell half. Hey, geez, these things are up 200%. We've got a nice profit here. I think it could go higher, but let's not get greedy. So I'm going to sell half of the position right here. We're going to hold on to the other half, and then whatever down the road, we'll say, okay. And again, very specific. This is the stock I'm trading. This is the exact, because sometimes we own options, more than one option on any specific, especially on some indexes or a stock. We may own stocks with different strike prices or different expiration dates, and so we're very specific on the way we play it. But the last thing I just want to mention is that you say follow my trades, which again has worked out very well so far this year. But I'm not the only one giving ideas on the chat room. And if there's anything we can really push here is that people who trade on their own are really putting themselves at a big disadvantage. Are there people who can do it? There are, but I'm telling you, and I've said this many times, but it's so true. Every one of those incredibly good expert hedge fund guys that have been making millions of dollars every year for years, or most years for every year, most years for years and years, what they do every day? They have, if they're at a big size hedge fund, they've got 20 traders around them that they're talking to all day long. Hey, did you see this? Did you notice that? What's going on here? What's going on there? Maybe, and even if you're a smaller one, maybe you're only talking to 2 or 3 traders that you're working with. But even then, you're talking to traders from other firms. You're talking from Goldman Sachs and Morgan Stanley and the specialties in the options market, the Susquehannas of the world, those types of people. You're talking to traders all day long. They don't just sit there by themselves and just sit there, bare their heads and do trades. They are talking and getting ideas and getting comments, not just ideas, but comments and notations from all over the street. And I just think for individual traders, this is the type of situation that enables them to do the same thing, because trading on your own, even if you're really, really experienced, is very, very tough. Even those biggest hedge funds traders don't do it. Why should you?
Right. So let's get to some of this stuff here, Matt, so that maybe you can show the folks here. We don't just talk here. We walk the walk. And your chat room, I remember when we launched it last year, Matt, and now it's, so many members there. The community is great. You have a Tuesday session too that you do impart a lot of knowledge. And I tell folks, turn off all the news and just listen to that call with Matt, because that's all you need, really. Like, you break it down, no filter, as loved, right? Before we, so just, if you want to share your screen and just kind of tell us a little bit about that Tuesday session, and then we can start showing them the trades you're making and all the stuff there.
Okay, here. Oops. So we do this every Tuesday at 11:30 Eastern time, and what part of the reason we do it on at Tuesdays is I want to get into the week a little bit. Especially around the holidays, people come back, and it's Monday's kind of a quiet day. It's hard to really get a feel for what's going on. Okay, this is my Bloomberg screen. And okay. And so we want to make sure that we, and then of course, we like to do it as the days we're into the trading day. And so we do it at 11:30 in the morning. And, we originally set this up to do something that we would do for, 15, 20 minutes and just see how it goes. And then move on, go back to the chat room and go back to trading. But the thing has turned into something that has been anywhere from 45 minutes to an hour. And it's just kind of blossomed into a nice program. Now, for instance, here, I just want to show you what again, we can show you what the trades and why we did it. RSI, oops. Okay, this is the TQQQ. What this is the QQ is the 3-time levered, bullish leverage ETF for the QQQ. In other words, the NASDAQ 100 ETF. And you can see it's kind of flattened out lately. We had all this volatility in the year, did really well. And, we've had a little bit of volatility here, but just in the last 2 weeks, you can see it's really kind of flattened out. But we've still been able to take advantage of it. And so I'm just going to go on what we call a GIP chart, which is a 2-day chart, or well, we can do it as many days as we want. Oops, hold on. And we wanted to buy some options on the TQQQ. And whoops, GIP. Okay. And bang, let me go here. Okay, so this is the TQQ from the last 2 days. And you can see what happened here. We were worried about the market started selling off, in the morning. One thing we knew going into this week is like, hey, Thanksgiving week is usually a slightly bullish week for the stock market. So we need to be a little bit careful. But I also highlighted, there's a lot of people, we listen to the financial news, they always say, why they kind of leave it there. It's always a good week for the stock market. Well, first of all, it's not always a good week. Number one. Number two, it's usually the 3 days after Monday. Monday can be an anything day, and sure enough, the market was down. It's the Tuesday, Wednesday, Friday of that week, and of course, the market's closed on Thursday. So, we bought some puts in here as the market started to break down, and it traded. It did stabilize, but we bought some puts here when the market was coming down here. And this is on the TQ, the TQQQ. Then we added some at the very end as we got into the end of the day, because even though the market bounced, the bounce didn't really hold. So I thought, this is not a good play. I don't like this play. But so by the time we got to about 3:30 yesterday, we had built up a position, not a huge position, but we bought it gradually. We bought it, we bought a little bit here, we bought a little bit here, and we stopped buying some between 3 and 3:30. But then we got towards the end of the day and I said, we do have to remember Thanksgiving week is usually a positive week. So we need to be careful and we want to put at least a partial hedge on. So we went in and bought some TQQQ calls. Now, to be very specific, we bought the 20 that we had earlier in the day, we bought the $21 call puts, okay, that expire on Friday, November 25th. And at the very end of the day, we bought the $21.50 calls. So we basically had a strangle on. We didn't put the strangle on at the exact same time, but for all practical purposes, we had a strangle on. We were leveraged. Obviously, we were more weighted to the bear side of things, but that was our play. Well, anyway, the market opened down, and so that looked real good. And it was funny too because I said, "Hey, do you know something? We didn't get any downside follow through." And again, I use kind of my gut feeling and also knowing that the seasonalities tend to be bullish for the stock market this week. So I said, let's go ahead and take profits. Well, sure enough, I didn't get the exact bottom of the day, but we made a little profit. I readily admit it was not a huge profit, it was less than 10%. But for an individual stock trade, you make a couple of percent in a day. That's a real good trade. Anyway, we got out of all of those. But we held on to our calls because, again, the whole thing is that the market felt strong. It's still, even though it dipped at the morning, it was like we're not getting the big downside follow through I was expecting. The bond market was doing nothing special. The dollar was holding in there. That wasn't, the dollar wasn't rallying. Interest rates weren't taking off. This market's not going to fall out of bed. I think we're going to be okay. And we held on to it. In fact, it was kind of funny. I hate to say it for myself. I said to people, if this thing breaks out above this high here, we were actually looking at the QQQ at the time. And I just said, if it breaks above that, you ought to add to your position. Well, some of the people in the chat room did, because I told them that was something they should do in advance. I must admit, I didn't do it because I had my hip replaced 2 weeks ago and I had to do some physical therapy. And by the time I came back, I was like, I'd kind of missed the move. But there were people in the room and I still held on to them. So for me, anyway, so this thing obviously rallied at the end of the day. When we got to here around 3:30, I sold my half of what I owned for a 40% profit. Nice 40% one day. Believe me, we've made a lot more than 40% many times. And then at the end of the day, I sold the balance right near the close. And I told everybody in advance, I said, hey, listen, make sure you know I am going to sell these. I tell people in advance, because sometimes it gets real near the close. And it's like, if I tell you 2 minutes of, do you have time to react? I want to make sure you know, hey, listen, I'm going to do this by the end of the day. I'm going to wait a little bit longer, but be aware. And that's sure enough, we did. We sold the balance and we made over 50% on that. So basically about a 50% return. Actually, it was a little less than 50% on the first, a little more than 50% on the second half. And so the overall return was about 60% on the overall picture. And again, I readily admit it wasn't a huge trade. We didn't put a huge amount of money into it, but it was still very nice to win on both sides. And that's what we're looking at. We're looking at, when we see opportunities where, hey, we want to put a little hedge on, because sometimes, and I'll show you, we've had moves that have been 50%. I'm sorry, the 50% was nice. We've had many moves that have been a couple 100%, 200%, 3%, 800%. We've had some well into the thousands of percent. That again, not that, I mean, those thousands of percent happen a couple times a year at the most. So I don't want to start saying, hey, come in here and you're going to be making, the first week you're going to make 3,000% trading with us. That's not what I'm trying to say. But we do have trades, and I'll show you them later on. But the point is that, what I try to use is a couple of different things. In this case, I was using seasonality, using the oversold condition of the marketplace. I'm sorry, the technical condition of the marketplace. And sometimes we use sentiment, excuse me. But what I try to do is combine all these factors for short-term trades. Obviously, we always want to look at the fundamentals. Fundamentals are always important. But as I said earlier, the fundamentals are, the market's only right about the fundamentals eventually. So sometimes it can be very wrong. So we look at the fundamentals. Then we look at technicals, which actually are fundamentally based. And then we look at sentiment, we look at positioning, we look at short-term technicals, we look at longer-term technicals, and we can get a good idea. And the key is to try to get the key turning points, because that's where most of the juice. You see them on Wall Street, most technicians, most traders, they try to get that 70% in the middle. Thing for me, though, is if you get the full 100%, well, you're not going to get the full 100, you're not going to get the exact bottom and sell at the exact top. But you want to get in that, because the 70%, you think it's not that much. But when I made a call on the energy stocks in the fall of 2020, pounding the table, saying we got to buy energy stocks, and most of Wall Street told me I was out of my mind. All these institutional investors were saying, "Are you crazy? There's nobody wants to buy these. Nobody wants to own these stocks." And I said that was the point. Everybody owns them. The fundamentals are actually much stronger than anybody thinks, because we don't have enough capacity. Nobody owns them. The bearishness, bearishness was high. Positioning was really very short. And I said these things are going to explode. Well, Goldman Sachs and Morgan Stanley, they gathered that middle 70%. They made 50% on the energy stocks in 2021 because they jumped on the bandwagon in January of 2021. I bought them in October, and being, again, getting in there that early made the difference between being up 50% and being up 120%. That's how much we were up by the end of 2021. And we kept, even though I turned bearish, very bearish on the market at the beginning of the year this year, I said, we got to stick with these energy stocks through the first half of the year. And that's what worked. But that's the thing. You want the key turning points. And we've been able to grab those on many occasions and enable us to make money in a year where a lot of people are losing them. Now, I'll give you, again, I said we've made over 1,000%. I'm going to give you our biggest trade. And again, I'm not going to try to say that this is something where we make every time we do a trade, because it's just not the case. You don't make thousands of percent. If you did thousands of percent on every trade, you bet the farm on just a few and retire, right? Or at least sock it away. And you're doing it from Hawaii. But let me just hear, what do we do here? Okay, here we go. Sorry about that. Oops. Oh, there. What happened? Bang. Okay, here we go. Okay, and let me bring up the slideshow. This is a trade we did earlier in the year. Oops, I got the wrong one. Here we go. And this was, again, one of the things that we really want to press upon everybody is that we do not concentrate solely on the stock market. We make money where we do trades wherever we think we can make money. Now, we do concentrate on the US stock market, but here is a situation where we bought some options in the FXI, which is the China's large cap stock ETF. Now we've done it. We've also made nice money in the TLT, which is the Treasury bond ETF, the LQT, the junk bond ETF. We made money on the UUP, which is the thing on the options on the dollar. European, we can do European stocks. We've even made money on wheat, on the wheat ETF, believe it or not. And these are things, one of the, I guess the thing, there's two things I really want to stress. And the first one I already mentioned was we're talking about how you got to trade, you need to trade with a team, and just trading by yourself is very difficult. But the other thing is we now have the tools that so few individual traders had in the past. It was only the institutions, because if you wanted to do a trade in China, it was like, great, try to find some broker in China. You don't even know who you are. I mean, if you're Fidelity and you call up a broker in China, they're going to say, oh, you're Fidelity. Oh, how can we help you? You're some individual trader. They go, who the hell are you? But that's what it was 10 or 15 years ago. They go, who? And I got to do a currency trade? Who are you? You got to wire the money? No. Now we don't have to do it like that. We have the ETF we could trade right here. And that's what we did. But we, again, like I said, we've done this in all these other different markets this year. But this is just the situation that works out really well. It said last weekend's chart. This is the chart I made back in March. So it's not last weekend's chart. It was the chart from March. So that's a little misleading there. But not misleading, it's just an old chart. But here it says this was accurate. We know that from China last year was just getting, I'm sorry, in 2021 was getting lambasted by their own internal policies. They were cracking down on many different areas. It started with Alibaba and Jack Ma, but it moved on to many different industries. Every single month they came out and whacked another group, and the market got hit. But as we came into this year, something else happened. The US SEC came in and said, we're thinking about delisting some of your stocks. And their market just fell out of bed. So they were looking really, so not only would we say, hey, it's one thing to force your own stock market down because you're going to do some issues, but now you have your biggest, I say enemy is too strong a word, but your biggest rival, economic rival in the world. The US is the one now knocking it down and forcing our market to fall out of bed. Well, I knew they'd have to do something to save face. So I said, knowing from experience, and following politics and the geopolitics over the years, I knew this is something that China would not let stand. But I also looked at the technicals. This is what's called an RSI chart. Standard details. Well, I'm losing my mind here. I can't remember what RSI stands for. But anyway, and this what this does is it shows whenever the stock gets oversold, it gets down to the 30 level. You can see they give you a green line, and the green line here that says go ahead and buy. Go ahead. That's oversold. See how it got to here? The stock rallied. See how it got oversold here? Stock rallied. See it got oversold here? Stock rallied. Oversold here? Stock bounced. Look how oversold it got here. By the way, the red line says stock. That means it's getting overbought. And you can see here I got to the red line, sold off, etc. So we're oversold here. It got sold. It was the most oversold it had ever been. The second most oversold I'd ever seen anything ever be. So I said, okay, this is going to be an unbelievable issue for the market. It's something we can really take advantage of. And so I came in and said, we got to buy some calls in this FXI. And so what we did, so sure enough, the next day, huge rally in the stock market, rallied 27%. That'd be like the S&P would, the S&P would rally, okay. Forget it. Okay, so anyway, so 27%, that'd be like the S&P rallying 27% in one day. Well, what do you do with that? That is just unbelievable, right? But what we had done on that day is we had bought some specific puts, very specific calls. I'm sorry. Oops. We came in, we bought the FXI March 18th, $30 calls. Now, again, we bought them on the 15th. They expired on Friday, the 18th. So we went in here, and sure enough, we bought them late in the day with this really ridiculously oversold situation. And so I bought Thanks. So, okay, yeah, relative strength index. That's driving me nuts. I can't believe it. I've been using an RSI chart for 40, well, not quite 40 years, but I haven't used it my whole career, but using it for 35 years and I couldn't remember the name of it, but RSI. Anyway, so so again, wait, the stock rather the next day. It's like, well, wait a minute. This thing opened up 1,000%. You didn't sell it right on the opening. You know something? If it was up 1,000%, I usually would. I'd say, hey, I don't care how much higher it goes. We're going to hold. We're at 1,000% in one day. Let's take it and pat ourselves on the back. But this was a situation I knew, because like some of those meme stocks, sure, it could shoot up, but it could go right back down in within the next hour. But I knew this wouldn't. I knew this wouldn't trade like a meme stock. I knew this would trade because I knew the Chinese government would push their stock market higher for at least the full day, if not longer. And so we stayed with it. However, finally, after about an hour and a half, about 11 o'clock, I was like, oh my God, we're up 3,000%. We can't be greedy here. So we sold half. And that was perfect situation for us. So we sold half at almost 3,000%, held on it to the rest of the day, right into the close, then up 8,000%. So combined was over 5,000%. I said, you know, guys, we got to sell the rest of it. So we took the profit, made over 5,000% on our money in just a day's trade. Now, you say to yourself, there was actually some people who held on a little bit longer, and they made close to 11,000. Some people made 11. As mentioned. Oh, perfect. Okay, great. I'm sorry to have to respond to this. Okay. So anyway, so this was, this is the biggest trade we've ever made. Now, I wish I could say that we did this all the time, but we have had other trades. We had a trade previous year in Viacom where we made did the same thing. We sold half of it for a gain of 2,500%, the other at 5,000. So you can see we made several thousand% there. There was another trade. We're talking about. I'm not the only one giving ideas in there. We have all these people in the chat room. They're talking about different things all the time. There was one woman who bought the Amazon calls the week they were about to split their stock, and she asked me about it. Other people were saying, "Hey, that looks good," and I looked at it and I said, "This looks really good. Go ahead." I said, "But I'm not going to buy it. I don't know why. I just had the gut doesn't always work so right." But I had other positions on. I didn't take it. Well, they sold it a couple of days later for the 2,500% profit. So like I said, people are, and I'm not the only one in there in ideas. There's several other people who are giving ideas all the time, and literally dozens of people who are throwing stuff in there on a regular basis. So again, it's a team effort. We have a great team in there. And but these are the types of things we threw together. I threw together the fact that the FXI was ridiculously oversold, ridiculously oversold. And and then, again, my knowledge that first of all, the market become cheap. So I'm using fundamentals on that. So technicals, fundamentals, and then knowing geopoliticals and knowing that China, there's no way they could let the US clobber their stock market. One thing that they knocked it down themselves, they weren't going to let that stand, and I knew it would come roaring back. And of course, they're a communist country, they could do whatever the hell they want. They could just keep buying stocks on their own account and push the thing higher. And that's what happened there. So these are the types of things. Now, I will say though that we've been making money here. I just want to show you some other examples, and I want to make sure this is not something we do once in a blue moon. Here's the SQQQ. That is, remember I talked about the TQQQ. Well, that is the leveraged bullish ETF for the NASDAQ 100, the QQQs. This is the leveraged 3 times leveraged bearish. Well, we made 668% on this one back in April. Oops. Oh, shoot. Hold on a second. What happened? Okay, there we go. But it's April. So this one, again, 200% on another pair of the SEQ. This was the regular QQQs. Again, going in May, we do this on a regular basis. I can show you ones from last December, January, February, March. But here's May, 215% on some regular QQQ calls. Again, so on both sides of the market. Look at this. Boom. Okay, the May 2nd, 320 puts. Oh, these were also puts. So the 318, we bought some. Again, 220%. And then again, this one was just 70%. Say just, you make 70% return. Again, I want to show you some others because it's not just two. Here's a great example of what we do in the chat room, trying to use my experience to help out. We made 400% on Apple calls back in May. We bought exactly the exact calls. The Apple May 13th, $143 calls. We bought them on the 12th, sold them on the 13th. Okay, they expired at the end of the week. But again, we have the tools to do this now. In the old days, if you wanted to buy something in May, you would have to go out several, well, in this case, you'd have to go out to June because they only had quarterly options. You know how much more it costs when you have to go out several weeks? I mean, the time value is much bigger when you have to go out that far. These people are hedging themselves. They're buying insurance against the position they're selling to you. So they've got to charge more. It's like anything else. If you're going to, are you going to insure? If you're going to, hey, I'll insure you, your next door neighbor for something. Well, for their whatever their tree doesn't fall down. Well, how much are you going to charge them if you're going to insure it for 3 days? You're not going to charge them much because the chance of that thing falling down in the next 3 days is low. What are you going to charge them if it's 2 years? Obviously, you're going to charge them a lot more because the thing could fall down. You have no idea what could happen in the next 2 years. So again, we have these tools. In the old days, only the institutional players could do it. Now we can all do it, and that's what we take advantage of. Here was a situation where Apple Computer, the stock had fallen 10% in just about a week, or a little over a week. And there was no reason. They hadn't made any negative announcements. The market was down a little bit. And I figured, what is going on? I understand the market's down. I understand what's going on in the cryptocurrency market's getting hurt. But I was like, this doesn't make any sense. And then it hit me. I knew from my experience, the cryptocurrency market wasn't liquid enough. Their market was crashing. And remember, this was back in May. And I said, I know what's happening here. They don't have enough money. They cannot sell enough of their Bitcoins, whether it be Ethereum, Bitcoin, I'm not Bitcoins, or Bitcoins or other cryptocurrencies, Dogecoins, whatever, to meet their margin calls. They need to raise more money. Well, so they have to sell what they do own to meet these margin calls. What did they own? I sure as heck figured if they're buying cryptocurrencies, they're not holding on to 3M or General Motors or General Electric. They're owning, liquid technology stocks. And that's so. And I said, I just thought to myself, oh my gosh, they're selling Apple Computer to meet their margin calls. Well, sure enough, on the 12th, the selling in the cryptocurrency market stopped. It stabilized. And yet Apple kept going down. And I was like, this is just a momentum play. The selling is over, at least near term, for the cryptocurrency market. Time for us to go in and buy. And sure enough, as we got towards the end of the day, late in the day, we bought some Apple calls. They were up over 400%. Now, I didn't get the exact bottom. I would have gotten 500% if I'd held on a little bit longer. I didn't. Boy, if you are going to get mad at yourself for selling something after a 400, that's a 5-bagger. Remember, 400% is 5-bagger. If you get that kind of return and it goes up a little bit more and you're mad at yourself, don't do this. You'll drive yourself crazy. You should never get involved in trading if that's going to tick you off. You pat yourself on the back and move to the next thing. Oh geez, I wish every once in a while maybe something goes up, suddenly the next day a stock gets taken over and you would have made millions of dollars. Okay, that's okay. But if you up 400% and you could have been up 414%, you could have been up 430%. You start worrying about that, you're gonna be in big trouble. But this is what we did. Again, I used my experience from seeing what had happened was long-term capital management. They had a bunch of esoteric positions in their bond portfolio, and they had to sell General Electric stock to meet their margin calls 15 years ago, something I'd seen then and a couple of times since then. So that's what we're trying to use. But just to go on here, whoops, I went the wrong way. And again, it's not just, I showed you that Q, we do a lot of VIX, and the VIX calls here, these are up 82% back in May. I'm going to show you, and again, more than the QQQs. The reason why I do trade the QQQs a lot is because they're more volatile. I mean, it's the NASDAQ. It's just, oops, I went the wrong way. I'm sorry. They're much more volatile. And so I was just showing you the same trades I had earlier. Believe me, we don't do that many trades in the QQQs, as it might seem. This was the Viacom trade. See how overbought it got? See how ridiculously overbought it got? That was during the meme situation. And I realized, hey, meme, Viacom, that overbought, its RSI got to 97. Are you kidding me? I was like, they're not coming up with any new technology. They're not changing. They're not going to say cure cancer. They're a television movie company. They have since split up to two different companies, but this is how we were able to take advantage of that. But again, here's a specific thing. This was I was telling you about earlier, where the people in June, people made 1,500% on one of the trades. Oh shoot, I thought there was. I thought it was, there was another one where they did make 2,500. I think I'll show up in here. But again, this was not a trade I did. But see that over 3 days, they bought on the 27th, bought on the 27th, sold it on June 1st, made 1,526%. And Advanced Micro Devices, here's one we made 140%. Again, some QQQ trades where we're making 500% in one day because the stock market had remember it had bounced back in early June. I said, this is a dead cat bounce I've ever seen one. And we made some real nice money there. But here's a situation too. Remember I told you about the XLE. What time is it here? Okay, good. Well, we saw the XLE. Remember how I said that I was really bullish and I rode this rally for a year and a half, almost a year and a half, worked out really well. Well, guess what? When we got into early June, I said, this is not going to last anymore. Okay, it's way too overbought. And I used even though I liked it long term, and I said, if you own the shares of these energy companies, don't sell them. But we're going to take advantage of this overbought position. And we, sure enough, on the 8th, we bought the XLE June 17th, $90 put options. 4 days later, we sold half of them with a we sold the first half with a 560% gain. I actually sold the next one for a little bit lower, but you can see our average was about a 500% gain in 4 days. But again, I don't want to bore you by showing you a million of these things. Here was this wheat call. Remember I talked about in July where we made wheat. That is the ETF for the commodity wheat. In the old days, 15 years ago, you had to find a broker on the Chicago Board of Trade, and he would do the trade for you. You don't have to do that anymore. You just go right to your whether you're using TD Ameritrade, whatever happens to be, they can trade options in these commodities and other areas. So TLT again, here's where we made 284% in the TLT July calls. But I'm just trying. Labu, this is an 800% trade we made in August. Again, I'm just trying to show you that we've done it every month. We get some real big trades like this, and it works really well. And this is Labu is the ETF, 3-time leverage ETF on the biotech sector. So we're doing TLT on the bonds. We're doing FXI in China's stock market. We're doing UUP on the dollar. We're doing the XLE on energy stocks. We're doing the LABU on the biotech stocks. Here's another one on that. Well, I'm sorry. So again, now we tier ones in September. We do a lot in these indexed options, 250% there. UUP, remember I told you about the dollar trade that we made where it was 100%. Again, so it's, sometimes though, just like the trade we had today, where we made, I can't remember, it was like 8% or something. I don't think it might not even been an 8% on the thing, but we were smart enough to get out of that trade. It's like, hey, I'm going to give you, I'll show you. Let's see. I mean, we would have lost a lot of money if we'd held on to that side. Instead, we took the small gain. It's like, this gain's not going to hold. Let's just take the small gain, hold on to our calls. So we made 60% on the entire trade. No, that's not 8,000%, but we're not going to get those every day. We're trying to get, again, but how many times do you make in 3 days buying any stock where it goes up 60% in one day? And
right.
That's what we're trying to accomplish on that active trading side of things.
And the thing, Matt, is that if you try to go and do this by yourself, let's say you're a new trader, you go try to do this on yourself, you're going to get smoked, okay? The reason why Matt's able to make trades, profitable trades on all these different types of asset categories is because not only does he know the instruments to do it with either the wheat, commodities, FXI, whatever it is, it's because he has an understanding of the global markets. Most of the people that you see out there on the news are just US equity strategists. Matt Maley is a global equity strategist. That means that he's aware of things that are happening in Japan. Right now, I could ask him about Japan or what's happening on the Philippines currency, and he can go on for days. If you don't know, Matt Maley provides research to institutions for whatever reason they're using it for investing and all that sort of stuff. You guys get it for trading on the day-to-day. But Matt, I'm getting a lot of questions here about the chat room. Let me just kind of get through these questions, and then we can get back here into some hot topics that we're going to cover, right, including crypto.
It's great. It's great to have me talk about all my great trades and pat myself on the back. But we definitely want to cover on what's going to happen over here in the rest of the year and into next year, because there's still a lot of things going on out there, whether it be crypto, the economy, whatever. So let's get those in, because obviously if people have some good questions, I want to make sure they get answered. You don't have to wait all the way to the end, and then we'll go ahead and start talking about what's really going on today, and hopefully how we can be helpful.
Okay, perfect. All right. So these, again, thanks a lot for sending these questions, folks. Does Matt mainly go over student trade ideas? Yes, we've have several great trades from members like Tiffany, a lot of different traders that throw out some good trade ideas, the Amazon trade, shorting Target. There's some great trades. Imagine there's a bunch of mini Matt Maileys there that have been trained by Mr. Matt himself. So yes, we do go over that stuff together. Are the sessions on Tuesdays recorded? Yes, they are recorded, and the members do have access to that. Let's see, next question. What is the chat room schedule? So the chat room is open 24/7. However, Matt is there from Monday to Friday, 9 to 5. That means you have a chief market strategist on demand, okay? Like literally. So make sure you take advantage of that. Now, there are times where we trade other things. As you can see, it's options, but we can trade options on gold, on the dollar, on many different things. So don't think that options is just options. We trade options on different things. Let's see. What is the price at renewal? It's going to be the same as today with the 70% off next year. It's not going to change. Does Matt provide education? Yes, constantly. Every trade provides education. He always puts market commentary on Tuesdays. And also you have the pleasure to know before he goes on CNBC or Bloomberg or CGTV. I don't know what that Europe channel is, but Matt's all over the place, dude. I'm telling you, like he's all over the news. So people know him in China and everywhere. Okay, next questions. What type of strategies? Basically, so I would call this volatility trading. Do you think that's a fair name, Matt?
Right. Yeah, we do options, but they're very basic. I mean, once in a while we'll do a straddle or a strangle, which are very easy. But other than that, we're not doing condors and whatever, it spreads. I mean, nothing wrong with doing that. And there are definitely people in our chat room that do those strategies. But we try to focus on volatility, trading volatility, getting key turning points, whether they be short-term turning points over the next couple hours, the next couple of days, and every once in a while, longer term. However, as you mentioned, and just to answer the question a little bit further that was asked of you, there's people somebody asked me today, what do you think here of Tesla for a long-term play? Should I be buying that here? People are always asking me about what I think about intermediate, maybe I might say intermediate, I mean 6 months to or 10 years. What do you think about this? And I'm more than happy to give my opinions. And sometimes I just don't have maybe a stock I really don't know very well. And I'll be honest, I'll say, listen, I just don't know. But some people will say, I really like the stock. What do you think? If I don't like it, I'm going to tell you I don't like it. I mean, doesn't mean you shouldn't buy it. I'm not your financial advisor, but at least you get an opinion. But I'll give you my honest opinion. And believe me, I've been wrong plenty of times. I'll be wrong again in the future. The thing is, my batting average is very, very good. But my point is, I'm willing to for longer term questions and longer term, if it's just a stock trade, a specific stock. Hey, what do you think of Bristol Myers here, and both fundamentally and technically, and I'm more than happy to talk about that. So it's not just short-term trades.
Right. So now, I know there's a lot of people there that also ask you. Because you're that smart, you'd obviously be dumb not to ask you, but you provide, like, if somebody's asking you, like, hey, Matt, what would be a great stock that I could buy for a long-term hold? Or what is maybe a swing trade? Like, people can ask you about stocks that maybe you're looking at there as well, right?
Right. And that's, believe me, there's some really good ideas. We come out there and they say, hey, what do you think of this? And I'll be like, holy cow, this is great. I can't obviously be watching 3,000 stocks every single day. It's happened several times where people in the chat room have mentioned stocks that I just hadn't noticed and had seen a key move or were about to look like they're about to roll over or look like they're about to take off, or things like that. And we jump all over that, And again, that's why we're helping each other. And it's not just me; it's that people help each other all the time. So it works out extremely well. But like you said, it's not just my ideas. Many people with ideas all the time that we're sharing with one another.
Right, and that's really what it is, folks. We focus there on. I apologize, they're doing some window work here, but we focus on options, but also people have full freedom to ask Matt about anything in particular about their stocks. And I remember that. All of the members, Matt, before we've had these little corrections before the big one came in, You were always telling them like, hey, guys, I think a correction's coming in. I think that we should all go light on stock, start raising some cash so that we can make money on the way down and find some high quality names. So you're always looking out for them, if that makes sense.
Right. I mean, one of the things we did was literally this week, a year ago, a year ago this week, where Sergio Nadella, the CEO of Microsoft, had hit the tape that he sold half of his personal holdings. I was like, of Microsoft. I'm like, what? And so I looked into it, and sure enough, I was like, well, nobody sells half of their. Well, sure enough, a week later, the stock dipped. And a week later, the stock went back up. He sold more. And I was like, okay, wait a minute. Big flag, big yellow flag. And again, he didn't do anything wrong. I shouldn't say it's a penalty flag. It was not a penalty flag. It was a warning flag. When somebody sells $374 million of his own stock, it's like, this is he sees what's going on. He sees what the Fed's talking about doing. He sees that his stock is way overbought. Way extended. And and he's going to get more stock in the future. He wants to take profit. Well, guess what? He saved himself $125 million by selling right at the top this time last year. And it's like, and again, I've said this many, many times in the past that people have been on my webinars, they get tired of hearing it, but it's a really good rule. When smart people sell, you got to pay attention. Now, Goldman Sachs sold, it was a different sale. It was an IPO, but they had been a private partnership for 100 years. Finally, they decided to sell. Why would you decide to sell? I mean, they all of them kept stock, just like Mr. Nadella did in Microsoft. He still has a lot of stock and millions of dollars worth of stock, but they sold to the public. Why would they sell? Well, guess what they sold? 1999. What happened the next year? Blackstone, one of the best private equity firms in the world. They sold, went public in the summer of 2007. What happened 3 months later? The market topped out. Great financial crisis. They saw it coming. I saw Sam Zell sold his real estate business. It was a private transaction in 2005 or 6, what it was, right at the top of the real estate market. That was his life. You don't sell your life. That's his whole life, was the real estate business. He sold it. Why? Because he knew it was ridiculous. He saw it gotten way too high and was coming down. That's what I think Mr. Nadella did. Mr. Nadella did nothing illegal or even remotely unethical. He was the one that pushed the stock up. The stock was pushed up by liquidity and all this other things. So he took his profits and moved on. He's done an unbelievable job managing that company. He continues to do. It's a great company. The stock just got ahead of itself. So, but these are the types of things that I'm constantly trying to talk about that necessarily most people on Wall Street really aren't talking about. Is just like, when the smart people sell, you got to know if they're really selling. I mean, back when Microsoft went public, Bill Gates didn't sell. He sold $1 million. That was it. He sold 1 million. He said publicly, if I could, I'd buy on this thing. And so he sold $1 million, kept the vast majority of this thing. And of course, now he's worth hundreds of billions of dollars. It used to be anyway, over $100 billion. I mean, it's tens of billions of dollars. So this is just just because a company goes public doesn't mean that they're suddenly the world's coming to an end. Most companies when they go public, they're just doing it because they want to raise more money to expand their business. It has nothing to do with cashing out. And in the case of Microsoft, it was the venture capital guys, the seed money guys who wanted out. They should have held on for longer. Gates saw how valuable it was, and he says, "I'm not selling anything. I'm keeping my shares." So again, these are the things we try to be. When Rodrigo talked about, let's talk about. We're talking about education. This is part of it. It's not just learning about P ratios and revenues and things like, or learning about head and shoulders charts or whatever. Some of these types of just insights that I've collected over the years that have been really helpful for me, and just I like sharing it with people because I love trying to teach, and seems to have worked out very, very well since we started the chat room. And these are the types of things that you're not going to hear that. You're not going to hear that stuff on most.
Right. And the thing is that like a lot of people will probably just try to see like, oh, okay, well, all he's doing is reading the RSI. My friends, 40 years of experience is really hard to kind of give you one simple answer as far as like what Matt Maley uses. I mean, he uses his brain, which is pretty smart, I'd say.
Yeah, I use the RSI all the time just because it's just kind of a nice one to start with. But we look MACD charts, Bollinger Band charts, stochastics, And then, of course, chart formations, whether it be head and shoulders patterns, triangle patterns. We have too many technicians get too complicated with it, but I try to stick with the ones that are really matter and the ones that really actually are helpful, whether it be ascending triangles or descending triangles or symmetrical triangles, rising wedges, falling wedges, etc. But yeah, if all you're looking at is RSI, you're gonna get burned, because you saw that what happened in that Viacom trade that I mentioned. If you sold it as soon as it got overbought, you would have gotten your head, your face ripped off. I mean, because it just kept going higher and higher and higher. It wasn't until I saw that it got ridiculous extremes, because I saw it was going, I knew it was a meme stock. I know it could keep going. I was like, this thing can keep going forever. But then when I saw the RSI got to 97, it's like, no, this can't go any further. There's just no way. And I was spot on. So we're looking at a lot more than just RSI charts. That's for darn sure.
Right. So let's get, and a couple of people are asking me, where can they sign up? We're posting the link on the chat. But let's go ahead and kind of get here to the sauce with crypto, Matt. Since we last talked, there have been some interesting updates with the FTX, including some investigations that are being launched into this crypto thing. I mean, I know you're all over this and you're on top of this. What is your take on everything that's going on with the crypto market? Can this spill over? I know you have a lot of thoughts on what's happening. What can you tell us about this?
Yeah, I just really think with it, this is, I mean, again, I'm not trying to say that this is something that's going to spill over in the kind of way that Lehman Brothers did, or Lehman Brothers did. I'm sorry, I just noticed that my charge is getting low, so I want to make sure to plug in my computer here. Sorry about that. So yeah, just to get into the on the thought of cryptos, it's like, I'm not saying this is going to cause the kind of contagion that will topple the global economy or anything like that, because the market's just not big enough. But there's some serious losses out there, and there's some very strange things going on. Here, I just have the Bitcoin chart up right now. It's kind of interesting how Bitcoin is held up. But what the hell is going on out there? I mean, they got some people are working very, very hard to make sure that they don't get their names put out there. We do not know who any of their investors are. We don't know who lost all this money. We do know some names because they were just publicly, but we have no idea what kind of size. Is somebody in trouble out there? Is that why they're hiding it? Because they don't want to find out. Hey, believe me, don't get me wrong. If some individual lost $1 million or lost $200,000 was their life savings, or even $10,000 their life savings, and they're wiped out and they're really mad and they're really bummed out, that's understandable. But that's not going to impact the financial market.
Yeah, I mean, what about Tom Brady? That guy was the face of
those. And again, it might, the Tom Brady's will be embarrassed. But what about some financial institutions that suddenly it's like, actually, we own a lot of this, and we don't want the world to know, because people are going to shoot against us. In other words, they're going to start trying to short the thing, and they're going to knock Bitcoin down, and we're going to lose it. And the point is, you have to take this in a situation, because again, I understand why people say, hey, this is pretty good. The market's held up pretty well with this, despite this big sell-off this big scandal in the crypto market. But I'm sitting there going, wait a minute. First we have Credit Suisse. They basically got bailed out behind the scenes, right? That's what happened there. They were in big, big trouble. Okay, Carvana, they're about to go. I mean, they're in trouble. I don't know if they're going to go out of business or not. But just look at the stock. Stock's down 90%, 97%. Again, this is not, and Carvana hasn't, as far as I can tell, hasn't done anything wrong. Not unlike FTX, where they, obviously were taking customers' funds and trading them. That's completely illegal. Carvana hasn't done anything illegal. It's just that there was so much liquidity in the system last year, in 2021 especially, and everybody was making money, and it's 1999, 2000 all over again. This massive levels of liquidity came into the system, just like it did in the late 1990s. Back then was for the Y2K problem, which we can go into in more detail if you'd like. And then this time, of course, was the pandemic. The Fed did the right thing by saving the system, but they kept the liquidity in much too long. That meant all these people, I mean, look at Meta. Meta just pissed away $10 billion on this metaverse thing because they could, because there was so much money coming in, they could. Well, again, that's an extreme example. Meta's not going to go out of business. I'm not worried about that. Facebook is still, a good business for them, their Facebook business. But you know how many other companies, even Amazon say, oh my gosh, suddenly our cloud business isn't doing that well. That stock has not been acting well at all. I mean, everybody said, they can spend as much money as they want on anything to grow any business, and really invest in that business because they make so much money in the cloud. Oops. Now they're not. No, they're not losing money in the cloud. It's still a good business for them. They're not making as much. That means they have less money to do other things. And it's something without the Fed providing all that liquidity through QE programs and zero interest rates, none of these private equity firms are going to have as much money to spend. Not even close. Is there still going to be money around for new startups? Of course there are. There's not going to be anywhere near as many of them, number one. Number two, the big ones aren't going to have as much money to just throw around at any little research product. I saw it on Wall Street many times where the bull market would come on and say, yeah, let's open up this department. Let's trade this, let's trade that. And the thing would implode, they'd shut it right down. Okay, this is what's going to happen. And these people, there was a guy on TV this weekend talking about how all these tech guys are so brilliant, they're all going to be able to find jobs. Well, yes, the very best one will always have a job if you're really good at technology. But the thing is, the really good firms are going to say, hey, you know something? We're going to lay off our bottom 10%, and we're going to take cherry pick the top people from these accounts, from these companies that are just going under. Okay. And because there's a lot of really smart guys at companies that aren't going to get there. They're not going to get any more money, so they can't get to where they want to do to really become a viable company. Technology is going to shrink. It's still going to be there. It's still going to be really good, but that's what the whole economy is doing. The whole economy has to shrink because we don't have all this liquidity to throw around anymore. There's so much fat that needs to be cut out, and that's what's going to cause the problem. Again, we'll talk about what I think is recession is coming and why the market almost has to trade lower over the next 6 months. It can do anything over the near term, but my point is that this cryptocurrency market is a situation. This crypto FTX thing is the FXI was the trade in the China market, but the FTX thing is just another indicator of what is going on with this deleveraging process. We are getting much less liquidity. Things are being delevered. The same thing happened in 2008. Now, this is a much smaller degree. I'm not calling for a repeat of 2008, another great financial crisis. But what I am saying is that it started off with Bear Stearns, not Bear Stearns going under. In 2007, with the market near its highs, two of Bear Stearns' hedge funds closed. Their credit market hedge funds closed. 6 months later, they were out of business. Okay, and then so it's like these little things. Long before everybody talks about was Credit Suisse a Lehman moment, was FTX a Lehman moment. Lehman moment's going to come at near the bottom. Okay, when things are really getting washed out. But you know how many companies had major problems before that happened? That's what we're starting to see more of it. First, we saw just a few small companies, then Credit Suisse, now FTX. Carvana, again, I don't want to put them in the same boat because but again, the stock's down 97%. And Credit Suisse was an over-leveraged situation. FTX, an over-leveraged situation plus, but maybe looks allegedly could be some illegal stuff. Carvana's not doing that, but it doesn't. So my point is that even good guys working hard, trying to do it, their businesses are failing because they don't have all this money. If you ever read the book on again, I don't want to get too into the weeds in this, but if you've ever read the book on the how Uber got started, and the amount of money they spent was just ridiculous. I mean, they weren't making money yet. Because they did more money, and they used to throw parties and say, "Hey, we're taking my whole team to Vail for a week or Aspen or whatever it happened to be." Millions of dollars on nothing that had to do with their business. Okay, but why could they do it? Because there was so much money sloshing around that they could just people were throwing money at it. Great, we'll keep building our business. And they did a great, unbelievable job building their business, but they probably could have been a lot better stuff with their money, but they had all that money. They just did ridiculous things with it. There's not enough money out there anymore. And so I guess I've kind of got lost on a tangent there, but my point is that we have a long way to go because of the excess liquidity, when you still have a market trading at 18 times earnings. Every single bear market since World War II, and probably since before World War II, I just haven't gone back further, every single one has not bottomed until the stock market got cheap. 18 times earnings is not cheap. It's cheaper than it was when it was ridiculously expensive, but it's not even close. It's still expensive. It's not even fairly valued. And we got a lot more to work out as the Fed keeps interest rates. I don't care when they pivot. This stuff about people, when the Fed's going to pivot, that is meaningless. The damage has been done. Okay. We're going into a recession. Okay. And this is going to cause the market's going to have to move lower over time. And we want to be able to take advantage of it. We've been taking advantage of it all this year. We want to continue to do so.
So, I mean, yeah, it just seems to me like, you know, you have all these Kim Kardashians and Tom Brady's of the world, Stephen Curry's, they're all pretty much being sued. And I just read the Wall Street Journal said that the DOJ was possibly, you know, investigating all this stuff. So look, Matt, I guess, Matt, this is just for all the new traders out there, it's very easy to fall into this. Oh, you know, look at, you know, Shaq has his new crypto, like all these things. And I guess from your side as a market professional, you're just looking at this and you're just like shaking your head like, this is, I mean, has this happened before where you see such a push for to pay celebrities to do this? Have you seen this before?
Well, to a degree, it was in the late 1990s. Now, again, I don't want to make the same comparison. It's very, very, very similar. Thankfully, it's not to the same degree. So in other words, it got so ridiculous in the late 1990s that when the market finally did turn, the NASDAQ fell 80% and the S&P fell over 50%. It's not, it didn't get as over, it was 30, the NASDAQ was trading 30 times earnings. I'm sorry, the S&P was trading at 30 times earnings at the top. This time it was 22 times earnings. So it has less to fall, but it still needs more to do. But my point is that, you know, everybody, you know, again, there was just all this money coming from the Y2K. People who don't know what that was, I'll try to be very brief, is that all the computers were set up in the 20th century to be, you know, they just put two numbers for the year, 88, 89, 90, 91, 92. Those were the years, 1998, 99, 90. The problem was the computer, when it went to 00, was going to be 1900, not 2000. And so all this, the computers all would have reverted back. And if you had a bank account, well, guess what? Were you alive in 1900? Well, no, you weren't even alive. So that bank account didn't even exist. You've got no money. So they spent 5 years and trillions of dollars or billions of dollars fixing this problem, and they were able to fix it. But they flooded the system with liquidity with all behind the scenes, all the global central banks. And so it's not a coincidence that right after 2000, and and basically in February of 2000, they gave it a little time to make sure, okay, everything is working. On January 1st, boom, okay, it's working. But let's make sure, let's let it go. Well, sure enough, they turn the liquidity spigots off. The market went straight down for 3 years. Okay, it's not going to go down as much, but that's the same thing we did. We had all this liquidity in there to save us from the financial system was on the brink in March of 2020, not because of what happened in 2008, it's because the economy had just come to a complete halt. Nobody's fault. Okay, not like it was in 2008. 2020, it was nobody's fault, but the Fed did the right thing. They just kept it on too long. And we have to reprice that. Too many people think we can go back to what we saw in 2021. We can't. We won't. Okay, that doesn't mean the market's we're going into a great recession, great depression, anything like that. It just means that we're going to have to deal with this longer. The Fed knows what it's doing. The Fed is not just fighting inflation. The Fed is trying to get the markets, all the markets, back in line with their underlying fundamentals. I'm telling you, if you ever get a one-on-one with a Fed person, they will absolutely tell you that. That's what they're really trying to do.
Right. So, Matt, do you think we're $31 trillion in debt? Rates are at the moon. And do you think, I mean, based on what happened in the European debt crisis that they had, is that a possibility here, or we just print more money? Could it get to that point or not? You don't think so?
The problem is you just can't print money forever. Because you are ensuring that inflation will become a major problem at some point. And of course, we've all been hearing that. Those who've been around for a long time, been hearing that for 20 or 30 years, and yet it hasn't become a problem. But we know it at some point it will, and that's what the Fed realizes. They're not stupid. They know. Everybody thinks how stupid the Fed is, and it's like, oh, they did this, they're hurting the market. I'm like, yep, they're hurting the market, but they're not. These people think that they don't know that they're hurting the market, or they don't realize that they're hurting the market. What they're doing, and what they've actually been saying, if you read between the lines, is like, we know this is going to be painful. We know this is going to cause a recession. I mean, Bostic was out just a week ago saying, yes, it's more important if it causes. There's a good chance we could go into recession, but it's worth it. It's the lesser of two evils, because if we let inflation run, it will get to a point where the recession will be even worse down the road. So nobody wants to take the pain. We want to have our cake and eat it too. We want to have keep the steroids and keep being able to bench press 500 pounds. But it doesn't work because eventually if you do steroids for too long, you end up being much weaker than you ever would have been and you can't recover. All right. What they're trying to do is help us get back in line, take the steroids away, get the things back in line. And believe me, if you're lifting weights, you're still going to be bench pressing a lot of money, a lot of weight. You're still going to be very strong. You're just not going to ever be as strong as you were before because you're not on steroids anymore. But that's healthy. That's healthier because you won't die as quickly. Okay, and so that's what the system is doing. And that the other thing though, I was just say is that all this stuff. There's a guy in the chat room who we all love. He's so much fun, and he kind of switches from being wildly bullish to wildly bearish every once in a while. But he's a smart guy and done very well. But one of the things he said was that we got all these stock buybacks, and it's like the problem with all these stock buybacks is they really don't do anything. And it's funny because I talked to Carl Icahn about this literally 2 weeks ago, right before I got my hip replaced, and then he repeated, he talked about it in an interview shortly thereafter. But he was talking about how, in a one-on-one phone conversation, he was telling me how, this thing with all this debt, all this corporate debt, way too much of it went to company buybacks. That's a waste of money. It's a complete waste of money in his mind. Others don't agree with that. But when you think about it, if you are interest rates were so low, so it doesn't matter. If you spend a lot of money to buy back, if you take a lot of loans out, okay, and you put the money and it goes to build a new factory, in other words, you're investing it into something will help you service that debt. Those buybacks do anything. That money's gone. You just bought back your shares. Okay, now how do you service your debt? Well, the interest rates. Well, that's fine. But if we go into recession, now you're making a lot less earnings. You've pissed away. You spent all this money, all this money that you got through loans to buy back your shares rather than something that would help you service the debt. And like I said, if you buy, you're an owner of McDonald's and you've taken on some debt to buy 2 more McDonald's, well, you're going to make money off that, okay? But now if you still only own 3 McDonald's, but you have the debt of owning 5 McDonald's, now those 3 McDonald's are working harder. They're not going to, and if business goes down, it's a bigger strain on your business. So I'm not worried about a major credit crisis. What I am worried about is having a serious impact on earnings and productivity and things like that.
Right. So my worry is that every time they try to fix something in Congress, and it's always involves spending. It never involves, hey, let's stop spending or let's cut spending. It's always, we have to spend another $1 trillion here. So in essence, are we just meant, it's just this going to be a forever thing where it's like, we're always just going to be, printing all this money to fix all these problems instead of cutting costs somewhere?
Well, at some point, there's some people who say, yeah, we'll just keep doing it until we blow up and we go, the empire falls like all great empires do and things like that. We can take that's not going to happen anytime soon, so that's good. But the point is, the markets will force us eventually. This whole thing. There's a great article today, actually, in Bloomberg, talking about how the QE didn't work. Brent Bernanke's getting all these awards for the helicopter thing, but in actuality, it hasn't worked. And just dropping money. Sometimes you have to do something. Okay, don't get me wrong. Like I said, the market, the economy completely shuts down. The global economy, you got to do something, or the economy is going to implode. Because what really matters is the fixed income market. That's what runs the economy. And if you can't roll over debt every single day, you have your short-term debt and things. That's what we were looking at. And we're staring into the abyss. People don't realize it was a different kind than we were in 2008. But they did the right thing. The problem is they need to be able to pull back on it. They didn't do it in 2000 and after 2009. And I think in the long term, we're going to find out that Ben Bernanke's plans that he's so lauded for turned out to be really bad ideas. And again, if they had just done it and let it pulled back on it and let things gradually go back to what they should be and let the asset values get back to what their natural levels, it would have been fine. But they couldn't do that. Politically, they couldn't do it. A lot of other different reasons. We could talk about it for hours. But the point is, the QE doesn't work. on a long-term basis. All it does is give, again, it gives drugs it gives steroids to a weightlifter, it gives drugs to an addict. That's not, we have to get off that. We have to get off those drugs in order to have the economy, have the markets run in a realistic way. Go back to being stock pickers and rather than just relying on the liquidity. Again, I pat myself on the back a little bit here today, but I mean, these people at the beginning of the year, they really thought that that the markets were up because they were smart. They did not give any credit to the Fed's largesse and what the Fed had provided. That was a big part of it. That's why I was pounding the table saying the market's going to have a serious, deep correction. I was saying this time, well, about this time last year, certainly in December of last year, well into January, raise cash. We got to get bearish bets on there. And I've been saying that in July and August, early August, I was saying it's a bear market rally. It's not going to last for all these reasons. I think the same thing's taking place right now. Again, markets, people say things are priced in. We're trading at 18 times earnings. Okay. Every single bear market has gotten cheap. They never stop at fairly valued. They always go to undervalue. Okay. If for some reason the Fed completely pivots, this stuff about a pause is a waste. That pause doesn't do anything. Okay. They need to act. History shows that they actually would have to turn on, again, drop interest rates back down to zero and do QE to get, if they want to go back to the 20 times earnings that people were looking for. We are going to have going back to every single recession since World War II and probably before, but I just haven't done the work on that. But since World War II has seen a decline in earnings. Right now, we're looking for $220 probably for earnings for the S&P 500. The average decline since World War II has been 27%. That did include the last two big ones. So even if you take out those, the average decline is 17%. I'm only looking for a 10% decline in earnings. That takes you down to 200. Okay, that means the S&P's got to fall to somewhere between 3,000 to 3,200 just to reach 15 times earnings, which is the best the market's ever done in a bear market. The best. Okay, some of them have gotten down to 12 times earnings or even lower. It's just not feasible. People keep talking about when the Fed pivots, and guess when the Fed did this? I go, that's all fine, but first of all, the Fed doesn't always pivots too late. Okay, well, actual pivot. I'm not talking about a pause. They actually turn and start being accommodative again. They always do it. They never do it when the market is still overvalued. They only do it after the market has become undervalued. Same thing's going to happen this time. They're telling us that's what's going to happen this time. The fact that they're going to lower, they're going to throttle back on the size of the rate hikes. So what? Okay, that they're still, then they're not going to be cutting rates anytime soon. Okay, and until they even signal that they do. And they're saying flat out, it's not even on the table. We're not even thinking about doing that. The market has to pull back. I don't want to sound it sounds like, oh my gosh, I'm calling for the end of the world here. I'm not. I'm just saying that we have to be realistic. I mean, well, let's look at one thing right here. Okay. You can fake. We all know earnings get played with all the time, right? They do write-offs and this other stuff. So there's always questionable how good the earnings are anyway. But when you look at sales, okay, you can't, unless you're flat out lying, which you'll go to jail for. Most CEOs don't want to do that, although there certainly have been some, Enron and some things where they've lied about certain things. But let's see, price to sales. What happened there? Price, sales, there it is. Bang. Okay. Oh, shoot. Okay, SPX. Let me just do it again here. Let me take a second. GP. Okay, price sales. Okay, here's a price sales ratio. Okay, it's trading at 2.3 times sales. Okay, again, you cannot fake sales. Your sales are your sales, right? Unless you're completely lying, which the vast majority, even really bad, I'll tell you that, even unethical CEOs, it's just too hard to do because too many people in your company would know what was going on. So it's very hard to do. So look at this. We're at 2.3 times sales. Is that near? I'm going back. This is what it was at the top in 2000. Okay, and way higher than the top in 2007. Okay, the same at the top in 2018 when we saw a big decline, and only slightly lower than the top, okay, in 2020. So we're looking for lows. You're looking for something down 1 point. I mean, obviously here the Great Recession, that was below 1. But here in after the, I mean, you're looking, we need this thing to get down into the mid ones before the market to become remotely close to fair value. So you're sitting there going, well, are the fundamentals equal to something we usually see at bottoms? No, it's actually in the price to sales, which is a much better gauge than price to earnings ratio. It's not what we see at bottoms. It's what we see at tops. It just got so ridiculously overvalued here that it's got to come down a lot more. Now, again, there's a lot of different things. Inflationary situation might help these sales stay elevated, but again, you can't stay overvalued. You still at least have to at least get to somewhere in here, somewhere below 2. So again, these are the types of things that I'm worried about with the overall market, and I think people need to be cautious about too. And it's, we see people like Stanley Druckenmiller who said, "Hey, it's going to be 10 years where the market kind of trades sideways." Stanley Druckenmiller might be the most successful hedge fund trader of all time, certainly one of the. And you don't say things like that lightly. It's going to take time. Now, I don't know if it's going to take that long, but it's going to take time to get the markets back to trading on their fundamentals. That's why if you're a trader, you need to be an active. That's why it's going to help to be active trader, or work if you don't have the time to trade actively and you want to work with Will Danoff of the Contra Fund at Fidelity. He's a brilliant trader. You can, he's somebody you can get into his fund in the public. Because he's going to be watching it, and he's a billion. I mean, he's really doesn't get anywhere near the credit he deserves for being an incredibly a brilliant investor, and he's been doing it for decades. These are the types of things that we have to realize that the last 12 years have been steroids. The last 2 years, or leading into this year, was ultra steroids. We're coming off those. But the thing is, we can trade. And I showed you all those trades we've been able to do, and we have the tools to do them. We have all the major stocks have options that expire on a weekly basis. All the indexes trade every single day. They have Monday, Wednesday, Friday for the S&P, the SPY, the NASDAQ, and QQQ, or the Russell 2000, the IWM. They trade Monday, Wednesday, Friday. Now they actually also trade on Wednesday and Thursday. I'm sorry, Tuesday and Thursday. The Tuesday and Thursday options expirations aren't quite as liquid, but they're still very liquid. You can trade those whenever you want. Again, the old days you had to do it quarterly. So if you wanted to make a short-term trade, it's like, great, I think Apple's going to do this in the next 2 weeks, but I got to buy an option. But the next option I can buy doesn't expire for 3 months, so I got to pay a huge time premium here. You don't have to do that anymore. So I just have to go out 2 weeks. Maybe I go out 1 week. Maybe I'll just go a couple of days. And that's again, and not only that, we have it in many different. I've talked about wheat, the dollar, other commodities, obviously crude oil, foreign markets, and individual groups. We can buy it. The XLK options on the XLK, the SMH, which is semiconductors, the IBB, biotech, go on and on. XLI, which is the industrial, and some of those group sectors, the options are less liquid than they are from others. For instance, the bank KBE ETF their options aren't very liquid, so we go with the individual stock individual stock options in that situation. But you just try to find the best ones, and that's what we try to do in the chat room. It's a situation where I showed you that we make money on the XLE, made it on both sides. We made just today. We made it both sides on the TQQQ. This is going to remain a process. The Fed is going to push us through. It's not going to be easy. It's not going to take 1 year. And because if they did it all at once, of course, everything would implode. They don't want that to happen. And people, we can talk about control and the Fed is this and they're really bad and all those other things. It's like, believe me, the Fed is not a government agency. Okay, remember that. That is a fact, an undeniable fact. They're not a government agency. They're owned by the banks. But they still do. I mean, the people that say they're trying to screw the people say, well, if they screw people, then they screw their owners, their banks. That's not, they still, if they don't want the banking system to implode by raising rates so much, so fast that the whole thing, maybe they're making a mistake. that's the other thing I just want to talk about before we move on is that, God, there's some people in there, and I understand, and it's great. There's professors and things saying the Fed's doing the wrong thing, the Fed's doing the wrong thing. I was saying the Fed was doing the wrong thing last summer, 2021. So they're keeping the little liquidity spigots open way too long. They need to shut those liquidity spigots down. But you can't trade on what you think they should be doing. You have to trade on what they are doing. They have told us what they are going to do, and they have done it. Now, everybody spent most of the year saying, oh, they're not going to keep tightening. They're not going to keep tightening. Well, they did, okay? And they told us they would, and that's what they did. You have to trade on what is happening, not what should happen, okay? And that's what, again, why we've been able to profit very, very well, up several 100% this year in a year where most people are losing money. And again, it's not easy. We have not every trade. We don't bat 1,000, but we want to bat. We don't want to bat 300. You bat 300 in Major League Baseball, you make millions of dollars. You bet in the trading business, you want to bat 600 or 700, and then have most of your hits be triples and doubles and home runs rather your losers to be easy outs. So you let your winners run and cut your losses on the losers. But then again, this is what we've been doing and doing successfully this year. And again, trading with other people is just I think it's an essential thing to do, and it's helped people. And again, you learn, etc. But the last thing I just say, of course, you get a money back guarantee. So if you don't like it after a couple of weeks, you can always get your money back. But I think the next month and at the end of the year, I don't know what's going to happen in the end of the year. Let's go back to the market. What I'm looking for here on a near-term basis. This is Thanksgiving week. It tends to be higher. I did sell my the calls that we own today because the Wednesday before Thanksgiving is dead quiet, and Thursday the market's closed. Friday is a half day, and market closed half day. We'll still do some trades, but I'm going to be a little bit more. It's just a tough day to trade. The markets are so thin. But my point is, right as we get into next week, I'm going to be looking at what's going on in the retailers. What's going to be happening? I mean, retail sales, the consumer's been holding up really strong. The problem is the only way he's been able to hold up so strongly is through adding to their credit. We see credit card debt moving up, consumer debt moving up. Are they going to pull on their horns now? Are this going to be the last hurrah and everything's fine through this thing, or do they shut it down now? We're going to know by the results from Black Friday on this Friday and Cyber Monday on Monday. By midweek next week, we're going to have a good idea of what's going on in the economy. And boy, if the consumer's pulling in its horns, the stock market's going to do this, because the stock market is now turning it, and rightfully so, turning its attention from when the Fed's going to stop raising interest rates to what's happening in the economy. And we're heading towards a recession. And we can talk about that.
Right.
But
anyway. Really quick, man. Just want to give a shout out here to Cooney and Mealy, new lifetime members. Let's go, baby. So if anybody, remember, we posted the link to join there in the chat. If anybody does want to do the lifetime, just make sure to text me or email me. The contact is there, Matt. So, I mean, we've definitely covered a lot here, man. We were talking a little bit about different sectors, but we really haven't touched on the real estate sector. I live in Miami. Things are not getting cheaper here. So, but it looks like some of the prices are, dropping. I don't know where the hell this is, but it looks, what is your overall take on the housing and real estate sectors?
Yeah, I mean, the one thing is that on the one hand, people, and again, I think it's going to slow, and it's ridiculously important for the overall economy. Why? Because it's everything. I mean, you build a new house, okay, you're employing not just, carpenters and your team on your team. You have 4 or 5 guys working for your team on a given house, but then, or maybe it's 10 guys, whatever, depending on the size of the houses of your business. But then you're also getting the carpenters. I'm sorry. Then you're getting the plumbers in, and you get the electricians in, and you get the roofers in. You got all these different people. Then you also, what are you doing? You're buying appliances. You're buying furniture. You're having floors put in. All these different things. It affects so many parts of the economy, and so it's incredibly important to the economy. Now, the one thing though is that some people have been scared to death, and it's like, oh my God, this is too, just like the housing bubble of 15 years ago. I don't think it is. I think it's going to weaken. I think it's caused a problem for the economy. I think it's going to help push us into recession. But we don't have the same kind of speculation where people were putting no money down, and so that they couldn't afford the house no matter what. And if they lost their job, forget it. People, and of course, all sorts of houses being bought on spec and trying to flip them. People buying 2 or 3 houses trying to flip them, and so they would just walk away from the house, and so walk away from the house, say, "Hey, the house is now worthless," and no, that's not happening. People are living in their houses. Okay, they can afford their houses. They put 20% down, and even it's funny because people say bought cash. They didn't really pay cash, but they had enough cash in the bank, where they could. And so in other words, they would they would go ahead and buy the house and commit to buying the house without the mortgage, because they know that if the mortgage was rejected, they could pay for the house cash. That's what that really means. But the point is, they have that money, and it isn't as speculative as it was back then. So too many people try to take the most recent thing, and we do it all in everything in life, right? We see a guy win 2 golf tournaments. It's like, oh my God, this guy's the next Tiger Woods. He's going to win 100 tournaments. A football team wins a couple of games, they're going to go undefeated. It's amazing that after how hard it is to go undefeated. That when the Patriots came close, I can see why people thought it, because they'd won a bunch of Super Bowls. The Eagles this year, I'm not saying they can't win. They're a great team, but after 7 games, they said automatically, "Oh, Jesus, they could go undefeated." Ridiculous. But that's what humans do, and that's the mistake they make. So, to answer your question, Rodrigo, but we got to talk about what's going on out there. So suddenly, the mortgage rates they're off their highs, but they've more than doubled. People obviously can't. It costs more. And people care about what their monthly payment is. That's what they think about when they take out a mortgage. What can I afford on a monthly basis? Not what can I afford for the overall house. And this is obviously raised it higher. We see what's happened with housing starts. We see what happened with existing home sales. The National Association of Home Builders data last week. Okay, let's pull that up. As a matter of fact, I'll pull that up for you here. Take me a second to pull it up. But this is really, if it falls much further, we're talking recession. Okay, 1.5. Let's see. Oops.
It's funny you were talking about the Eagles. I heard every time they win a Super Bowl, the world collapses. Oh
boy! So then we want to be, and with that, well, and you know something? Every time the Patriots win one, it's usually very good for the market. So everybody should be, just saying. People, even though most people outside New England absolutely hate.
These are the secret indicators that we don't talk about in public.
Right. Yes. Okay. Here's this thing. I'm just going to pull it up for you real quick. But here, graph price. This is basically a poll. Let's go 1.95. Okay. So see how much this is falling off a cliff. This is basically it's a confidence indicator for home builders. So we saw what happened here. Because the Fed came in. We avoided a long-term recession, but obviously think that the housing industry got crushed for a while there, and we're getting back to that level. See what happened here when it fell off a cliff like that. You see what happened here. Again, it fell really big during that time. We're in that same type of thing. Again, sometimes it's just a short drop. Well, that's not good, but look at this. This is just not what you want to see when you're thinking that we're going to avoid a recession. This thing about a soft landing is laughable. I don't want to say it's 100% sure, but that's what Wall Street economists, it's like that you get fired for predicting a recession. What they always do is tell you that are in recession after we're in it. They don't tell you it's coming. That's career-ending type stuff to say. So people won't do that. Economists won't do that. At least major Wall Street economists. They might do it outside economists maybe at universities, as long as they're not getting paid by somebody to be bullish, which many of them are. They're not going to tell you until and sometimes they won't tell you until the recession's already over. So this thing of soft landing, Goldman Sachs even repeated today, and their economist is very, very good, but he's saying, no, we're still looking for 35% chance. For Goldman Sachs to say 35% chance, it means they really think there's an 85% chance. Okay, they'll never go over 50% until we're in a recession. Okay, Goldman Sachs just doesn't do that. It would be like Warren Buffett saying, "I think we're about to go into a financial ruin." Even if he believes it, he can't say that because it'll become a self-fulfilling prophecy. And so I'm not blaming Goldman Sachs of that. I understand why they can't do it. But when they say they're looking for a 35% chance of recession, they think they think we're headed for recession. Okay, and then you have too many other really smart people who aren't tied by those things that are saying exactly that. And therefore, I think people need to act accordingly. Again, if we're heading towards a recession and the market was trading at 15 times earnings or less, then you say, okay, they are pricing it in. They're not pricing it in. 18 times earnings is not pricing in a recession. It's not pricing in a mild slowdown. Okay, it's pricing in. It's expensive. 18 times earnings and 4% yields is expensive. It's not. They used to say it's expensive, not even fairly valued, not even close to fairly valued. Markets got to keep that thing. The real indicator in bear markets is not when the Fed stops, pauses. It's not when they start making their interest rates, their interest rate hikes smaller. It's when the market gets cheap, or when the Fed pivots. Now, if the Fed pivots before the market gets cheap, it would be the first time they've done that. But they might do it. If they do, believe me, I'll change my stance very, very quickly. You can't just go slowly on valuation levels, because obviously, as the market was rallying while they were feeding all that liquidity into the system, we would have said sell the hell out of the market when it got to 18 times earnings on the way up. Well, the market went up another 20-30%. We would look very foolish if we did that. So you got to know the situation getting involved. But don't fight the Fed. Don't fight the Fed. Don't fight the Fed. I say it.
Right.
They've been fighting the Fed all year, and they're still telling us that they're going to keep raising rates, even though at a smaller level, and they're going to keep them there. Even Goldman Sachs, instead of not looking for a recession, said they look for a 10-year yield to be above 10% through 2024. So that's more than 2 more years. How do you justify 18 times earnings or 2.3 times sales with interest rates of 4%? Those aren't overly high on a long-term basis, but it's not something that justifies that. It might justify 16 times rather than 15 times, which is the real historic average.
Well, I mean, I guess the elephant in the room is like, are we going to stop printing money? Because we are, currently we are involved in some sort of proxy war with Ukraine and Russia, and we're printing all this money. And I'm not saying it's good or bad, but
it's bad. It's bad, but it's what we're doing. So you got to realize it. I mean, I agree. It may not be bad for 10 years. I don't know, but anyway, I interrupted there. I didn't mean to say that. Sorry.
No, that's so. I mean, the thing is that it looks like that's the solution for everything. From what I've always seen, the national debt ceiling keeps getting increased. It looks like nobody has any conscious, because it's not their money, right? It's taxpayers' money, so they don't have a problem spending it. But it doesn't look like we're gonna this whole thing with Ukraine and Russia looks like it's going to carry on for a longer time than we thought, right? So I'm expecting more assistance, more financial assistance, right?
Right. I mean, and look at that. I mean, they already said they, after that story that the bomb landed in Russia, in Poland, and they said it was from Russia. Then a couple of days later, they finally said, no, it looks like it was really from Ukraine itself. Doesn't matter. They put in a thing to add $37 billion into for Ukraine. Okay, when they found out that the missile didn't come from Russia, they didn't pull that bill. That bill's still there, and they're going to pass it, and they're going to get more money. Again, I based on my own, I follow geopolitics, but one of the things that we really helped us this year, especially in the first half of the year, so people in Eastern Europe who are in the chat room were telling us what was really going on, and they're saying Russia's not going to back down. What are you out of your minds? And it's the same thing, right? I think Putin can save face now with how much how badly they've done. They're going to go. I mean, from what I understand, again, don't pretend. I follow it very closely, but I don't pretend to be an expert on it. But they're getting ready for a winter offensive, and from everything I hear, is that one of the reasons why we need that extra $37 billion is because Ukraine is running out of people and running out of stuff to protect themselves. They've done unbelievably well, but I guess they still have the upper hand. But the situation on the ground is not as people were kind of portraying it a couple of weeks ago that they're on the brink of winning the war and that Russia is going to completely pull back. Then Zelensky comes out and says, "Oh well, you know something? Not only do we want to keep this thing going, not only do we want to stand up to Russia, we want Crimea back." So So you really, is that something you say when you're about to start? Again, maybe it helps you in your negotiations or whatever, but yeah, that's not stuff you say when it looks like this war is about to come to an end soon. So, and again, that goes back to the inflation situation with keeping oil prices high and food prices high. We get into the new year. Guess what? The agreement right now is that Europe will stop taking Russian gas. What's that going to do for inflation? So it's a they every once in a while they try to rumble and say, oh, there's some peace talks going on. Well, they did that, talked about peace talks
Right.
15 years in Vietnam before they ever started. I have no idea. I'm gonna say 15 years in this war is going to go on, but I'm telling you, it's not a good situation.
Okay. And so we first heard from Jay Powell, that we first started hearing that, hey, some from the Yellen lady that some, inflation is good, then soft landing, and then, get ready to feel the pain. So how much attention, I know that those events bring high volatility to the chat room, to the markets. And that's, we make a lot of our money during these volatility times, Fed meetings and such. But how much are people paying too much attention to what he's saying instead of what he's doing? Like I've heard you call us a few times.
Yeah, I mean, it's that we gotta watch that. But one thing here, and I'm just gonna pull it up here. That's November. Today's the 23rd. Next Wednesday is the 30th. I don't know why I use this prop because have me sit next to me. But this is Jay Powell is going to give a speech next Wednesday. This was just announced a week ago. I don't know if people read about it. They highlighted in Barron's. I can't take credit for this. Highlighted in Barron's, like suddenly out of the blue, he wants to make sure he speaks next Wednesday. Okay, so they're going to go out with the Fed minutes are going to come out tomorrow, which could be a market mover. We'll see what happens. But maybe he comes out and says, "Oh, I'm going to be really dovish so that everything is good. We get a good holiday season and everything. We get Santa Claus rally and everything." But they've been laying the groundwork from 75 basis points down to 50. My thinking is that he's going to come out and make sure that isn't seen as a major pivot. Okay, and it's not. Pivot is. I laugh when people say, "Oh, pivot. They've pivoted. They've gone from 70." How is that? That's not pivot. Pivot is when you go from doing one thing to doing the other. That's what they did in 2018. They went from tightening to easing. This time they're talking about going from tightening to tightening slightly less aggressively. That's not a pivot. I mean, it's not even a pause. They're still, and as I said, they're not even talking about a pause. I think he's going to make sure that the people know that. And again, this was never scheduled. This was just put on the schedule. For some reason, he feels it's important that next week he talks about policy. And so be careful about what he says, I guess is my point. Now, again, we want to make sure we know what he said, what he does rather than what he says. But I also want to talk about what really smart people said. And again, remember we talked about what happened with Mr. Nadella at Microsoft. Brilliant man, brilliant manager, great CEO. And look what happened with Jamie Dimon at JP Morgan. In 2016, the market was down 15%. And everybody started worrying about, are the banks in trouble again? And he came out and said, no, the banks aren't in trouble again. And I'm going to buy $26 million of JP Morgan stock with my own money. Not a company buyback, my own money. Okay. The stock bottomed that day and went up for 18 months. The market bottomed that day, went up for 18 months because the most powerful businessman in the world gave it an unbelievable shot of confidence. This spring, the market was down 15%, just like it was back in 2016. And instead of coming out and saying, I'm going to buy my own stock, he said, watch out, batten down the hatches, a hurricane's coming. Then this fall, and was in September, I think it was, he doubled down on that call and said, the recession's like I said. So when smart people, again, this is not like, well, the bank guys, they always got to talk, sometimes they want to make things, lower expectations. No. In 2016, he said, this is not a time to worry. Not only don't listen to what I say, listen to what I do. Okay, watch what I do. And he bought stock. This time, he ain't buying any shares at JP Morgan. All right. He's warning people about battening down the hatches and layoffs and things like that. So so these, it's not just the Fed chairman, all these important people who see, and again, his business is all over the world. He sees everything that's going on. And I'm not saying he's omnipotent and anything like that. Maybe he's wrong. I mean, he's been wrong before, and I'm sure he'd be the first one to say it. And he'll be wrong again before his career is over. But when you don't do one thing and then do the exact opposite unless you see something to make you act that way.
Yeah,
But anyway,
there's-
so we're getting to here. I mean, we should talk about a few stocks here because we got.
no, yeah, we've gone. The thing is, Matt, that like when I do these sessions with you, man, they just. I mean, you got the passion, dude. Like you're on it, man. Like you know. So they.
I love it. I love it. But at the same time, too, I get. I don't want to get bore the heck out of people here, but I do like because we do usually do some picks or people who just want to talk about some specific stock. It can be an ETF, it can be an individual stock, and some people. So if you have some things in there, just throw them into the chat with Rodrigo. He'll read them to me, and we can talk about some of those names before we close out here tonight. But if there's some other issue before that you'd like to talk about, or we can just talk about stocks I want to talk about while they're putting those names in there, Rodrigo, whatever you want to do, we can talk.
I mean, what are your thoughts on the dollar? I know you're looking at a lot of
okay,
things.
let's pull that up here. It's while we're talking. It's always good to have the chart up while we're talking about it. The dollar index. Okay, we saw this sell-off here, which is good. Oh, okay, let me just. And you see how? Okay, let's look at a longer picture. Oops, sorry. Okay, I want to get rid of some of these lines just so the charts aren't so busy and confusing. We don't care about there. Okay, so you can see how. Let's go here. Okay, look at this. Okay, I'm going to go back. We don't have to go back that far because it's hard to see. But let's go back to 2018. It's a little better. But see how the 200-day moving average was really important support for the dollar here. That's the purple line, the 200-day moving average. It did dip below it, obviously during the, that was during the pandemic, when the worst of the pandemic, it's right back up. But when it finally broke below it, boy, it really stayed down. So that old resistance, this is one of the keys in technical analysis, old support becomes new resistance. We got up to it, actually, and that's key. Remember, whenever you break any support or resistance level, if it's a mild break, that's not enough. You always want to see it frequently goes a little bit above a resistance level or a little bit below support level, and then goes right back to what it had been doing. Here was one thing, it went right back down. But finally, when it did break, man, it just took off. Well, now we're getting back down to that level again. We got back down to it, and again, I'll zoom into it a little bit more. We got back down to it just sometime. So what's going to happen now? It became oversold, so it's bouncing back to work off that oversold condition. But this could be very, very important because one of the things, people say, well, this is going to be really bullish for the economy, for earnings and stuff like that, because so many companies get their profits from overseas, or their revenues from overseas. Well, the problem is that if the dollar goes down, that's bullish for commodities. Okay, so all this talk about, geez, oil prices are going to come way down, and gas prices are coming, food prices, et cetera. And if the dollar comes down, the commodities are going to be buoyed. Again, commodity prices don't have to go. People are like, they're way off their highs, so everything's fine. It's like, no, if they stabilize at much higher levels than they have been in a long time, which it looks like they're going to do, this is going to be a problem, and a lower dollar is going to cause even more issues. So, but having said that, it will have our change how we trade these individual stocks, because then we're going to start a lot more carefully at some of these international names, the 3Ms of the world, things like that, who have huge amounts of sales overseas. And so, and everybody's been talking about how the small cap names, they're the ones that are going to do really well. Well, if the dollar goes down, that's not going to be so much the case. Bang. But see this, how it broke this key trend line? Okay, we can even call it a YZ, anyway, but we talk about wedges and things, but see how it broke it. So that is the first warning shot. If it breaks below that 200-day moving average, we're going to watch it even closer. But again, we also look, like I say, the MACD charts. Now, interesting, see how this is here? That the dollar It's like it's sold off, and now it looks like it may even cross back up. If we get a positive cross, that will show that the momentum is regaining and we're going back up. All sorts of things going on. I guess my point is we're at a key technical juncture in the dollar. I got a funny feeling it may not be resolved until we get into the new year, but it's something we all going to have to watch very, very closely.
Right. No, thanks for that insight. So we have from King Pun HD, believe it's Home Depot.
Home Depot, hot dog. HD Home Depot. Let's say, okay, now. This is the key. Again, so many critical junctions let's push on things here. Now, one of the things is like, okay, what is this? What is going on with this? With what you mentioned the housing industry earlier. Again, hopefully this will be educational for people. We try to talk about educational stuff all the time. Here's the 200-day moving average, right? That's that purple line, remember? Remember here was old support, broke down, it became new resistance, couldn't break above it there. Now it has. That is bullish. But you can see its RSI is getting overbought here. That's okay. That may just be a near-term thing. Does it mean it's going to fall out of bed like it did back in August? Or is it just going to pull back? It may pull back to the 200-day moving average, work off that overbought condition, and then shoot higher again. So what we're going to, but the positives, and so then we're going to look at the fundamental side. Again, we want to look at fundamentals, we want to look at technicals, we want to look at sentiment, positioning, etc. But on the fundamental side of things, what's going on in the world? Well, people are more reluctant to buy houses. Okay, what's going on with employment? Employment is remaining strong, right? So employment is remaining strong. People just don't want to buy a new house, but they got money to improve their house. So they're going to go. They're going to go do home improvement themselves. But a lot of, believe me, there's plenty of stuff. You go into home improvement on any morning, 7 days a week. It's filled with contractors early in the morning. They're picking up stuff there, and because they're doing, some of them are building new houses, but a lot of them are just doing additions to a house or redoing a kitchen, whatever happens to be. People are going to be less well. And the other thing is, people don't want to sell their houses. They're like, we were thinking about buying a bigger house, but we've got a mortgage at 3%. Why the hell if we move to a new house, we got to get a 6% mortgage? I don't want to do that. Okay, so we're just going to add to our house. So again, on a technical basis, you see not only is it broken above its 200-day moving average, it's also broken above its trend line, going back to the highs from the very beginning of the year. And so what we're looking at now, and I'm just going to look at it on a closing basis, HD, equity, GP. Okay, so here we are. Again, it's overbought, so we got to be a little careful on a near-term basis. It may not break out until it pulls back, and look at that, boom. So here, so we made a nice double bottom. See how this will be a double bottom? And we follow that up with a higher high. This stock's going to run. And you're like, well, how the hell do you like Home Depot if we're going into a recession? It's like, well, actually, Home Depot, again, it usually trades for the housing stocks, but not always. And because, again, people are, it's like we all hear about this thing about trading down. People are going to Walmart more often because they can get things for cheaper there. Well, trading down is another way. Even well-to-do people are trading down by saying, instead of buying a new house for $1.5 million, I'm going to spend $200,000 putting an addition on my house. And so they're still trading down, even though they're spending more money, if it makes sense. I don't know if that. So again, so this one's looking pretty good. I just think, again, going back to that RSI chart, see how it's overbought here, got overbought there. Again, maybe it's just a little thing that needs to pull back a little bit, work off that but we break above, what's that level? $325, which is basically where we are. Again, if you happen now, it looks like it'll probably have to happen after it works it off and then it takes another run. Boy, that's going to be really bullish for this stock. And we're going to be buying calls on Home Depot if and when that happens. One of the things, although just again, educational wise, that makes me a little nervous, and I must admit I haven't looked at this in a couple of days. So, whoops, just put the wrong thing there. Okay, is lumber, LB1.
I don't think you're showing your Bloomberg.
I'm not.
Mm-hmm.
I'm not showing your Bloomberg.
No, I don't think so. It's just
okay. Something. I think I hit the share screen wrong. Okay, share. Now can you see it?
Yeah.
Okay, perfect. Yeah, I hit the wrong button there. But here's lumber. Lumber is down. Okay. The relationship between lumber and Home Depot, even more so than the other builders, is very high. So I'm going to be looking at this too. We want to see lumber rally back. Again, if we get a weaker dollar, lumber should rally back. So we'll play that by ear. But this setup right now, again, you get above 320. Again, if it's 325 and 50 cents, no, that doesn't do it. But you get it well above in a meaningful way, 2 to 3% above 325. That's going to be the momentum money is going to come flying into that stock. So again, you say, well, how the hell could we, if Home Depot's got to go down if the rest of the market goes down? I'm like, well, the market got crushed in the first 5 months of the year, and the oil stocks rallied strongly. So we can't have groups and individual stocks can rally in the face of a further decline in the broad market.
Okay, then we have, yeah, we got your favorite one, Tesla from Markey.
What does Tesla do? Are they in the? They're in the fast food business, right? Obviously I'm joking. Okay, now the thing about Tesla is when it broke 200, I said this thing's going to 170. Okay. And then it started to rally back, and people say, well, it's rallying back. I'm like, no, this is going to be perfect. It's going to go up to the old. And the reason why is, of course, you saw what happened here. This was the old, it made a lower low because, okay, let's just draw the line in there real quick. It was actually just above 200. I'll get rid of these moving averages because they're just kind of taking up room right now. Boom. But see, once it broke 200, you knew it was going to get hit. Then it started rolling back up, and I go, perfect thing. What happens when a stock gets hit really hard? It breaks support, goes back up, retests that support, and then falls out of bed. Well, that's exactly what happened here. So my call worked out really well. But now, okay, now what have you done for me lately? You said it would break 200. It did. You said it would go to 170. It did. Now what? And the stock is oversold. I wouldn't be shorting this here. I would not be buying puts here. But the thing is, I just don't like it very much. And this whole thing with Musk, I mean, with Twitter is just a shit show. Pardon my French, but it's just, he is not concentrating on Twitter right now. They're having issues, and the biggest concern, of course, is the slowdown in China, and the worried about. I mean, they went from 2 years, a 2-year delivery time. 2 years delivery time to 4 month delivery time for a Tesla, and now it's like a few days, and it's like, how did that happen? Well, because people don't want them as much. They're not ordering. Teslas are expensive. So if they have issues in China, talking about China demand, I'm not talking about the geopolitical aspects of it. So I don't want to back up the truck here. For a trade, it's probably going to be good soon. It's going to be hard the next couple of days because of the illiquidity in the marketplace and the quiet, because of the holiday. But it's now looking. I think if we get much lower here, I'm going to look to buy that on a short-term basis. But I still think that it's going to take a while for Elon Musk to refocus on this business. And so any little bad news that comes out, especially has to go with China. We get further weakness in China. Their COVID things are starting to pick up again. If they shut down again, oh gosh, it's causing a problem. So if I do buy it, it's going to be buy calls for a short-term trade. And we'll look at that probably next week at that possibility. We'll have to see how it looks next Monday or Tuesday.
Okay. All right. Well, Matt, any closing remarks on your end before I move on here to showing them the live room and all that stuff here?
Yeah, just to say that I just really strongly believe that this volatility is going to stay with us for quite some time. If you want to, if you have the time and inclination to be an active trader, you don't have to be trading all day long. That's why you have a separate page for when I put the trades in there. You don't have to try to scroll up and down and find the trades that I've put in there at any given day. And they're not going to be, well, there'll be some tomorrow, I'm sure. Friday, there might not be any because it's only half a day. We'll just have to see. But the whole point is that trading by yourself is just very, very difficult to do. And this is one of those situations where you really, like I said, the real pros, the best pros in the world, they're talking to people all day long, and you want to be doing the same thing. That's number one. Number two is that we have the tools now to be able to take advantage of it, which individuals didn't have in the past. So good luck with everything. I think the volatility is going to stay. I do think the market's going to head lower. I'm just trying to be realistic. A lot of people on Wall Street are paid to be bullish. I'm just there to help you. And we don't churn account. I don't make any extra money because you do a lot of trades. It had nothing to do with it. You pay that fee for the subscription, and that's what you pay. Boom. And if you do 100 trades in a day, or don't do you trade once a week, you know, it's not making any difference to me. I'm just trying to help people make money in a tough environment, but in an environment which is really exciting, and one where we've been able to make money this year, and where most people have lost money. And so good luck. Have a great Thanksgiving for those of you here in the U.S. to celebrate Thanksgiving, or around the world, and a great holiday season over the next months. Hope to see you in the chat room, because we're going to have, I think this is something that's going to be with us for a while, this volatility. And instead of sitting back and being a victim of it, be somebody who can embrace it and take advantage of it. So anyway, good luck. Thanks, Rodrigo. We'll see you in the chat room, and great talking to you.
Damn, son, where'd you find this?
All right, Matt. I'll see you in the chat room, brother. Great session. Okay.
Thanks, buddy. We'll talk to you soon.
All right, folks. That's Matt Maley, Chief Market Strategist at Miller Tabak. And luckily, we have him as the lead trader of the Stock Picks Inner Circle chat room. Sorry about that. So yes, there are a lot of things that are covered here, but I do want to show this really quick, because a lot of the folks that joined, including Millie, including Kenny, Cooney, and all the other people that joined, just so that you know what you have to be looking for once you're in this session, okay? So this blue chat room is where you want to be. Once you log in, you're going to see this blue panel, select stock picks, that's Matt. And you're going to see here chat on the top, right? And there's two channels here, very important to know, okay? You have the Inner Circle chat where everybody's posting, and that is, you know, everybody, all the members, including Matt. So everybody's there. We're all there the whole day, Monday to Friday, 9 to 5. Matt is there. However, it's open 24/7. So we have an international community. I didn't mention that, but we have people all the way from, like, I've signed up people from Nigeria, Finland, Ukraine, Canada, every place you can imagine, Hawaii. It's a great community. I remember when I first launched this chat room with Matt, and it was just me and him. Now we have a great community of hundreds of traders. I can show you here right now. There's 132 people that are online right now, even though Matt is not there. Why? Because the community is so great. And I know a lot of people that are just here for the education. Many people that are new per se, they will just sit there and just go through all of the data insights that we share, not just from the chat members or Matt's comments, but just overall as a community, what we're talking about. Keep in mind, this is not a community that we're trying to buy meme stocks or talking about short squeezes or things like that. We're trying to trade the macro, and we can still do that and make even more gains than the people that trade meme stocks, okay? I know, because I used to trade those kind of stocks because of the return. I stopped doing that. All I do is trade with Matt, and basically you have that as an additional education source, right? You have all of that conversation that the members have back and forth throughout the entire day. You can even private message people there. Look, Trading Zone sent me a private message about something that he needed, okay? Then the other channel that you have here is Matt's important messages, and only Matt can post there. So the reason why I suggested that we should have a chat room just for Matt is so that you guys don't get lost trying to find his comments, you know, in between the whole conversation that everybody's having there, okay? And that was a great suggestion, because it's a lot easier for you to keep track of these trades. And again, keep in mind, these are not like credit put spreads, condors, diagonals, verticals, or any of that. We're not doing any complex option trades. We're doing the basics, okay? And by basics, I mean buying calls and buying puts. We're not doing anything complicated. So it's perfect for new traders. I think every new trader should start here, because yes, the gains are meme stockish, if you want to call them that, but they don't come from meme stock decisions, right? Again, we're looking at the macro, and we're doing that with Matt. There's nobody better that can do this with you, because for the most part, analysts don't have the skill sets that traders do. Luckily, Matt has both of those skills and is able to use them in his advantage, right? So the format of this is pretty straightforward, okay? So like, I mean, it's so easy to follow through, right? Bank of America, November 25, $37 puts. That's so, like, all you got to do is go to your brokerage, whatever you're using, and then select that specific contract. He's going to tell you when to buy. He's going to tell you when to sell it. All right. Now, we also have sound alerts. Keep in mind, you can turn them on and off. Let me zoom in here. So when I click all, you see that the bells turn yellow. If I click this, the other button, they go away. So that means that the push notifications are no longer there. I'm sorry, the sound notifications. The other thing is that we will be releasing push notifications in the very short term, from what I heard from the developers. So that's what they told me, that so basically within a month or two, you guys will have these push notifications set up. You will not have to pay anything extra. Obviously, we keep putting in more money into this chat room. We keep adding more features. We keep including more things, building value. That's what it's all about here, building value for you as a user. And when I started this chat room, it didn't look anything like this. So we have a full team of coders and developers that have keep improving the site and also the chat room, because it's what has the most value for users, right? Newsletters are great, but there's a limit to what that can do. You're not able to take advantage much of the volatility if things change day to day, and this guy Powell can come out any single day and start talking whatever he wants to talk about. So of course that's going to change the market. Of course that's going to impact the markets. And it's important that you're aware of how it's going to impact it, how you can profit from it, right? We're not just here to just talk about Powell all day and just like, oh yeah, he's such a dork. The reason we do this is because we are able to profit from these moves. This is a volatility trading chat room, to put it in simple terms. It's not a day trading chat room. Now, we buy a call and it goes up, 200-300% the same day. We might take some profits, but it's not always like that. Typically, the move happens within a couple days out or things like that. Obviously, you cannot time volatility. That's why it's called volatility. But when we're able to catch those moves, that's where the big money's made. So personally, I can tell you, I've benefited a lot from this chat room, and I've made some good money with the chat room. And I don't even use it like the members here use it, because obviously I'm slammed working here, trying to improve the chat room, trying to give you more resources, trying to make this a better experience for you. That's been my number one goal here since I launched the chat room. How can we make it better? Like that whole meeting that we have on Tuesdays did not exist until I had a quick call with Matt. I gave him a suggestion. He went with it. And then it started as a 15-minute call, then a 30-minute call, and it's gone up to 1 hour. So 45 minutes or 1 hour. So we keep doing these things based out of our mission here, which is to empower individual traders, help retail traders, help the little guy. Nobody cares about the little guy. Everybody's out to screw the little guy, until we came up with this chat room. And Matt didn't really even touch on this, but a lot of people on Wall Street are paid to be bullish, right? And especially on the news. In Matt's particular position, he's not. So in this particular case, the only way we benefit is if you're successful. So if you're not successful, we're not successful. If you're not able to make money in the chat room, you won't renew, obviously. So our goal is to help you make money, flat out. It doesn't matter if we have to go long or go short. We're totally agnostic to where the markets will go. If you notice that none of these things here that you hear me talk about are perma bullish, perma bearish, we're literally just talking about the current market that we are in right now. And that means that we are okay if the market falls, because we can make money if the market falls, or if it goes up, because we can still make money if the market goes up. So it really doesn't matter the direction that it's going. Ultimately, Matt basically feels out the markets. And ultimately, he's got 40 years doing this. A lot of you guys haven't even been alive for that long, including myself. So the experience is really the game changer here, because especially if you're new, because there's a million ways for you to lose money if you don't know what you're doing. And I'm talking not just from my personal experience, but I'm talking from the experience that me talking with 9,000 traders from around the world. Okay, that's quite a task. And I've been able to learn a lot about you guys, what type of trading you do, mistakes that you make. And you'd be surprised that many traders make the same mistake. And it's almost like these are the easiest mistakes to avoid. But with Matt, all you have to do is follow his trades so that you're not out there trying to figure this out, blowing up your account, trying to learn, and blowing up your account at the same time. You'd be surprised. People blow up accounts like on a daily basis, like every day. And people try to wing it because in 2020, money was free, basically. Everything was going up. So everybody was a genius. Everybody was a ninja trader. And now that we are in a totally different environment, things have to change, and either you adjust or you blow up your account. And how many hits like that can you take before you're out of the markets? So it's very important to be smart about your money and not try to just wing it because just because on 2020 everything was going up. And I remember in one of these sessions about a year and a half ago, something like that, Matt and I were discussing things about the Fed and about rates and things like that. And there was this one individual who just said, I don't know what the Fed is, and I don't care what rates are. I just want a stock pick. And at that point, that just reminded me of like how I was when I first started trading. And really not learning is a problem, because all the people that didn't know what the Fed is or didn't know what rates were and have been long or just going on the long side all this year have been completely smoked. So at one point, you're going to have to learn. And I don't want you to learn by blowing up your account. It happens a lot, okay? It happens to a lot of traders, actually. So that's why we're here. That's why we're giving you these resources. That's why we give you all this education, the Tuesday sessions. And you don't have to go out and try to figure out which contracts to buy or anything like that, because Matt is giving you the exact contract that you need to buy. So you don't have to go and figure it out. Some people out there are like, yeah, I feel bullish today, and that's it. Like, there's no specifics, no follow through, no trade management. And that's what we do in the chat room. We'll tell you specifically what contract to buy so that you can see right here. I'm going to sell the TQQQ November 18th, $22.50 calls that I bought yesterday. So he's telling you exactly when he's buying. He's telling you exactly when he's selling. And it cannot get any simpler than that. Buying a call is the same concept as buying a stock. You go out, you buy it, and then you sell it. Okay. And when you buy a put, same thing. You go buy the put, you sell it. So there's really nothing complex about this. But if anybody does have questions about the live room, Matt's strategy, or anything in particular that Matt discussed, right now is your time before I do wrap this baby up. Okay. And somebody's asking where to join. I put the link there in the chat, so that make sure that you are using that link. If you want to do the annual, if you want to do the lifetime, just send me a text. My contact is there as well. But folks, I'll give you a couple minutes here. If you do have any questions there, you do want to type out. And the session is going to be on Tuesdays. It's at 11:30 a.m. Eastern. It goes up till about 12:30. So it's probably the only session you need throughout the week, because everything else is covered in the live room. As you can see, there's also market commentaries that Matt will put, but it's not just this, right? It's not just all of his trade alerts, entries and exits and all that stuff, right? You also have direct access to Matt here, where you can post, right? He's also answering questions, and we get a lot of questions there in the room. A lot of people there are asking, what do you think about CPI? What do you think about PPI? What is your expectation on the retail numbers? Where do you think such and such numbers or the employment numbers will be at? What is the expectation of the jobs number? So all these events that are happening right now, employment numbers, CPI, PPI, manufacturer index, all these different things, we trade those volatility, events, right? Those things that happen. Raf, yeah, I can do that, man. Just send me a quick email here, okay? Send me an email before we finish the session. If anybody does have questions, you can ask me now in the chat, or you can just, send me an email, and I'll be more than happy to help you guys out. I can put myself in your shoes. I'm a very empathetic person. I know what it is to be a retail trader and how to start and how overwhelming things can be. But the only thing that I wish I would have had when I started was a chat room like this. Unfortunately, I had to go through a lot of pump and dump chat rooms and a bunch of other things to realize that, hey, a lot of people out there are just down to screw the little guy. And that's really why I'm so passionate about making these chat rooms a safe and a great environment for people to learn and make money, to just create a great community, a great environment of people that are out there just trying to learn and make money together. Okay. Not like those pump and dump chat rooms you see on Discord or anything like that. We have an actual chief market strategist here. Okay. 40 years in Wall Street. That's a lot. So Deborah, it's good to see you. I hope you're feeling better. Deborah Connolly has been solid, like never missing one of these sessions. So And look, it helps. So, I mean, why do you think I do these things? Because I know it helps traders. I would like to show you the emails like of the people that just email me saying, thank you so much for doing this. I was able to, such and such, improve this and learn about that. And if you think this is great, I mean, you haven't even seen the chat room. You haven't even been there, because once you're in the inner circle chat, you see all the other traders talking about what's happening in the markets. And that's really good, because you have to get exposure to these things. So let me show you a couple of the chats from the members so that you can see a little bit, right? Okay, we got Value Play. I know this person, Biking Chef. How you doing? Snowy, what's up? Polly Pennies. We have somebody that is working at UPS, and his username is Paul Delivers, which is incredibly funny. But then also he was also like just throwing it around. Hey, like our deliveries are pretty low. So we have people that have full-time jobs in different companies, and everybody pitches in, everybody helps each other out. That's the beauty of the chat room. That everybody that's in here is a verified human being, not fake, no fake accounts, no bots like Reddit or Wall Street Bets, any of that stuff. Real people, real traders learning every single day and making money together. Once you actually get into the chat room and you start making money here, you're going to realize this is a workplace, and it is a workplace. We have people that trade full-time, part-time, full-time traders, part-time traders, or people that work full-time and just trade during the volatility events. And you're going to realize that, hey, these are my coworkers, right? So we all try to make this chat room a better place, including myself, because I also benefit and I make trades from this chat room too. So the chat room itself is beautiful. The community is amazing. We got Jim in the house. Let's see who else we got here. Felicia, solid longtime member. Big shout out to Felicia. She's a realtor. I mean, I know a lot of these people on a first name basis. It's like a second family to me, these chat rooms. Because I put a lot of work, really into making sure these are great and you have a good experience here. And it's definitely turned out to be amazing. So, a big shout out to all the folks there. Big shout out to everybody watching here also. I mean, you've made it this far. So I got to give you a shout out too. Folks, if you've been watching this and at this point you're still watching, it means that you're part of the winners, right? Winners always make sure to put in extra work. Winners always go the extra mile, and winners never quit, right? So even if you're feeling overwhelmed, know that number one, you're not the only one. And two, we're here to help you, specifically in the chat room, because we have a lot of great members that obviously want you to be successful. And then we also have Matt, who is literally striving to make you a better trader every single day. So it's a great community. It's great. You have to come and check it out on your own, because people have fun, people crack jokes and all this stuff. It's a great place to be at. And once you realize that you're making money in this chat room and having a great time, making friends, learning things, you're going to see things from a different perspective. Sometimes I wish I could be there more, but then I also have to work on improving the chat room. So I know it's a great place because I'm in there every day. I'm always just looking at what Matt is posting. I never make a trade without seeing what Matt is doing. And I never trade against Matt because that never works out. And I'm just going to give you some advice, like, don't ever take the opposite trade of Matt. Don't, it's not, it's just not smart. Vishwa, I got your email. I just sent you a reply there. Okay. So, all right, cool. No, you're welcome, dude. All right, folks. So I think that kind of makes, because that wraps it up here. We've had a great session. I always have fun doing these things, especially doing them with Matt, because he brings so much knowledge to the table. But just know that this chat room was literally made to help you be successful. It doesn't matter if the market's going up or going down. We're here to help you with that. And all you have to do is follow Matt's trades. It has a clear entry, clear exit, and it tells you what contract he's buying specifically. It's not like, just try to figure it out. It's always a specific type of contract. that, one second. Okay. All right, folks. So yes, the chat room was basically made to help you be successful. Okay. And it's coming from somebody that has been in your shoes, someone that is in your shoes. I am a retail trader. I'm not a journalist. I'm not a reporter. My background is in finance. Like all my 10 years, I've been in finance. And I got in like you to the stock market without knowing anything about the stock market. I tried to wing it. I blew up my account twice. It didn't work. I tried some pump and dump chat rooms, didn't work. And ultimately, the whole goal of this chat room, this should basically be the last subscription you ever purchase. This is going to be the last subscription. And that's kind of the mentality, really, you should come into it, because just know you already have a chief market strategist with 40 years of experience in Wall Street, plus the amazing community that you have there. Literally, as long as you have internet, you can take advantage of this. I know people that have full-time jobs that they have this thing open on a window, just like you have your Gmail open, like you have your Instagram, your YouTube, whatever the hell you're doing. You can have this chat room open. And the difference is that this is actually making money, making you smarter. So I think that covers it for today, folks. I want to appreciate everybody that's been here. Big shout out to all you guys for being here, for being consistent and wanting to learn and improve your trading. If you do want to take it to the next level, though, I really think you should join the chat room. It's a great community. You're going to love it. You're going to make friends too. You're not just going to make money. You're going to make money, make friends, and also learn, right? Not just, try to read the news and try to self-teach yourself, by blowing up your account, which is just not. And I know this happens a lot. Maybe a lot of people don't like saying it in public. I understand. But I think that if I can tell you about my example, about what happened to me, you can kind of get a sense of this, right? I'm okay talking about this openly because I know that it's going to help people make the right choice. I know it's going to help you realize this. And I know because I talked to you guys after the session. I'm not going to say any names or nothing like that, but just know if you're trying to wing it, like that's what it's a perfect recipe. It's a perfect recipe to blow up your account. Trading options and trying to figure it out on your own. That is the recipe for blowing up your account. So, Deborah, I will see you very soon. G will, anytime. All right, folks, a big shout out to you guys. Just know that if you need anything, the contact is there on the chat. I look forward to seeing all y'all in the chat room. Also, make sure to know that the schedule is Monday to Friday, 9 a.m. to 5 p.m. That's when Matt is there. But then the chat room is open 24/7. 24/7, it's open the whole day, right? So you'll have full access to that. You will get additional trade alerts sent to you by email. There is a bonus if you sign up while we're live, or at least, while we're here. So yeah, folks, that does it here. Thanks a lot. I wish you guys the best. Have a good day. Happy trading. Happy Thanksgiving for those that do celebrate it. And I will see you guys in the chat room tomorrow. All right, folks.